Mm. Did y'all hear that? Oh man. All right, we got Jerome Powell today at 9 a.m. Oh man. What's up, DS? How you doing, man? So yeah, we're waking up, man. Oh man. All right, we're up. Market is at 387.20. Let me get the music going here real quick. Hold on. Oh man. All right, so market is slightly down today. I think a lot of people are apprehensive regarding the Jerome Powell press conference today. We do have Jerome Powell today. We do have that press conference. That'll be interesting to see what happens here with it. We do have Jerome Powell speaking today in Sweden. Let's get some music going here. But yeah, let me know if you guys think we're gonna get good or bad movement from that. I don't know, man. I don't know what we're gonna get from it. Yeah, it's at 9 a.m. Eastern Standard Time. We're gonna stream the whole thing right here, as we always do. We also have wholesale inventories coming out today. Right now, it is 6:20, almost 6:30. And so the real question is, how will Jerome Powell go about this meeting? Is he going to say positive or negative things, good or bad things? Let us know what you guys think. I don't know what he's going to say, man. Again, we could do either one, really. Depends on what he thinks the market's going to do. Can y'all hear the music? I have no idea how commodities are going to react to the speech. I hope he says optimistic things, but like I said, man, you never really know what he's going to say. But yeah, the speech starts at 7 a.m. or at 9 a.m. Negative but priced in. Powers an overly strict headmaster. Uh, what's up, Beach? Yeah, let's do a poll here. I think a poll would be good. We got a few people asking about potential predictions on. Let's do a poll here. I think a poll is probably a good idea. Does the market react positively or negatively to today's Jerome Powell speech at 9 a.m.? Positive market reaction will be one option. Negative market reaction. And then we're also going to give an option for neutral. All right, vote on the poll. Let us know. There's the link. Yeah, man. We'll see what happens here for this press conference. I don't know if we're gonna get good or bad stuff. I hope it's positive, but like I said, I don't really know. I can only hope it's good. Who knows if it's gonna be good or not? We'll see. But bear or bull? I don't know yet. I hope it's positive, but you never know what Jerome Powell is going to say here. So I hope it's good, but I really don't know. I hope it's positive. We got wholesale inventories at 10 a.m. as well. And I think they're actually doing the conference right now, if I remember correctly. If it's negative, do we break below yesterday's close? Good question. I don't know. We don't know how much info he will divulge either. Yeah, we don't know what he's going to say. I think the market reaction will be initially negative and then we'll correct to neutral. Then tomorrow, maybe another little push. Hopefully. Bro, why is Fed BS? They said they will increase quantitative tightening, but they did the opposite instead, increasing liquidity. Yeah, I mean, what you got to understand about everything the Fed does is that it's going to be spurred by the market, so they will change their decision. It's not something that they've stuck to one plan. They will change their decision pretty quickly. All right, guys. So Tesla's up to 121.40, still holding. Market pulled back some yesterday. Yeah, market completely turned. No, the Powell speech hasn't happened yet. It hasn't gone up yet. All right, so let's find the Powell speech. I think the speech is actually going on at 9 a.m. I know the speech is going on at 9 a.m. and that's what we're going to stream. I think it actually already started, but I don't think Powell's speech speaks until 9. The whole market's ready for this Powell speech, though. Yeah, we're going to live stream the speech here, Kumar. Yeah, I don't think you should trade while he speaks. I don't think that's a smart idea. I think you should probably trade very slight until then, too. I think that's probably the smarter move. Again, don't copy me. No idea what anything's going to do. Wait, is Bed Bath & Beyond earnings today? Wait a minute. Ooh, Bed Bath & Beyond earnings are this morning. Whoa. Okay. Forgot about BBBY. Yeah, Bed Bath & Beyond earnings are scheduled for an hour from now. Interesting. All right, so yeah, we got Bed Bath & Beyond earnings in an hour from now too. What do you guys think will happen for that? Yeah, let me find the history. I got to go back and check the history and find the page that the Powell speech is on. I know I had it up yesterday. I was watching it. Here it is. Oh, they sent me an email. I forgot. I got them to send me an email yesterday. Where is it? Here it is. Oh, wait, where is it? Okay, so yeah, it's going to be streamed Tuesday, January 10th. It'll be live streamed. It'll be starting at 10 a.m. CET or 11 a.m. CET to 6 p.m. CET. So yeah, it should be live right now then, right? Where is it then? I think I saw it on Bloomberg. Yeah, we'll wait for the Jerome Powell speech. Yeah, man, you know how it goes, bro. The shorts will be constant. Yeah, I actually spoke with the program manager, Susan, yesterday on via email, and she said that it would be available. So I'm checking for you guys. You know. Somehow I need this in English. There we go. You should be able to get a Ritz Bank in play, but I saw it on Bloomberg, to be honest, this morning. So I should be able to find it. Saw it on my phone this morning. Let me find out what link I had and then just stick it up there and then copy that one. But yeah, so Tesla up to 121. So Tesla leading the market today. Honestly, I guess it was just really extended on the downside. You know? I guess it's called the EA event. Maybe they're not live yet. I don't know. Yeah, they're always late. It's 9 a.m. Eastern. Yeah, they're late, but that's okay. All right, guys. So yeah, look at Tesla dip down under 121s. The market is down to 386.70s, 386.70s. All right, guys. So yeah, so this is the International Symposium. He's in panel 3. So bear with me. I'm going to mute this for a second. All right, so we got the screen muted for a second. I want to check something here. Okay, yeah, we're not the only ones streaming this. Or we're not the only ones that don't have it up, so it's not started yet, unfortunately. Let me email the lady again. I spoke to Suzanne. Yeah, market's looking weak. All right, we're going to go ahead and turn this off now. Yeah, what's up, Jack? It starts in an hour. It's not supposed to. According to their time slot, it's supposed to start at 10 a.m. Or no, it's supposed to start, according to their time slot, it's supposed to start from 10:30 a.m. to 6 p.m. in Stockholm. Right now, it's almost 1 p.m. in Stockholm. So I just don't think it's started yet. I've checked a bunch of different places. It doesn't look like it's started yet. All right, guys. But yeah, market's looking weak. I kind of want to short the market here, to be honest. Yeah, we're going to be broadcasting Powell for sure. Yeah, it's going to be at 9 a.m. for sure. So yeah, it's going to be at 9 a.m. Right now it's 6:40 in the morning. So it's going to be in 2 hours and 19 minutes. So yeah, Jack, I know exactly what time it starts. All good, bro. And we're going to stream the whole thing live. Don't worry. I'll put this up on screen. We will stream the entire thing here. Don't worry. Put this up so you guys can see it. Yeah, all good. All right, guys. So wife changing pump incoming. Bed Bath & Beyond earnings come out at 7:30 Eastern Standard Time, 7:30 Eastern Standard. Can y'all hear the music? Sound check. Let's do a sound check. Can you hear the music, guys? Also, hit the like button if you haven't already. Tesla is still testing 121s. I might short this market once it opens up for me. We're gonna wait, but we might short the market once we can. All right, we got a job report last Friday that saw wage growth cooling much more than expected and workers clocking few hours for a second straight month. That might potentially make the Fed lower the rate of rate hikes. We still got about 20 days until the next FOMC meeting. Can y'all hear the music? Yeah, I know. Just to put this into perspective, guys, I know the Jerome Powell speech is scheduled to start at 9 a.m. I know Jerome Powell's in panel 3, and he's set to speak at 9 a.m. And we're going to stream it all live, so you'll be able to watch the entire Jerome Powell, like all the words Jerome Powell says today. You're going to be able to watch it live here. You'll be able to watch the market reaction too. So we're going to put a window up right here, so you'll be able to watch the SPY itself as well as the full Jerome Powell speech. So don't worry. Subscribe. We cover all the major Jerome Powell press conferences, rate hike decisions, CPI, PPI, unemployment data, jobless claims numbers. We cover it all, and we cover it very fast. Thousands of people tune in for these streams because we cover this data very quickly. And so we're ready. Don't worry. Yeah, Jerome Powell speaking on what's called the International Symposium on Central Bank Independence. People have used cards on finance above $1,000 a month, and the retail is still bullish. Yeah, cars are one of the biggest bubbles right now for sure, bro. So like, brother, cars are, you know, ridiculously priced right now. I would never buy a car right now. The only I don't know. I think the flipping market for cars is really good right now, obviously for obvious reasons because the margins are better because of everything going on. But it's just the worst time to if you're buying a car, if you're financing a car, that you should not be buying one right now. It's better to just get a you know, used car right now and just kind of chill instead of trying to buy because the price of cars are just ridiculous. This is Thinkorswim. This is TD Ameritrade's Thinkorswim. We also have Bed Bath & Beyond today, man. So we do have BBBY today. That has earnings and the Bed Bath & Beyond earnings. Right now, it's almost 7 a.m. It's almost 7 a.m. The Bed Bath & Beyond earnings drop at 7:30 Eastern Standard Time. So the BBBY earnings drop in about 45 minutes. We also have Albertsons. Albertson earnings today as well. Tesla pulling back some. Again, I'm not going to be buying anything really ahead of this just because I don't see a purpose in it. I think right now it's time to just chill and wait for the Jerome Powell speech to happen first before we take any size positions, just because of how volatile things can be from these Jerome Powell press conferences. And I recommend you guys do the same. Again, I'm not telling you what to do. I'm not an investment professional. We're not liable. If you lose money in the market, always take your own assessment, trade responsibly. But with that said, I'm getting flat ahead of this, and then maybe if we get some type of trend that shows up from this, then we'll piggyback off of that. But that's the plan right now. Maybe if we get some type of thing, we'll piggyback off of it. But that's it. I'm not going to be taking any huge position ahead of this. That's a gamble in my opinion, and I don't want to gamble. I'm trying to take high probability plays, and I don't think those are them. So. How you guys doing so far this week? My week has been pretty solid in futures. I could put up my profit graph here in futures. And we had a really bad Friday where we tried to scale up in size. But this is my week so far since Friday. So we had a really bad Thursday last week. But since then, it's basically been straight up. We haven't had a losing day since. So we'll see if we can keep that up. Again, I'm not guaranteeing we can, but we'll see if we can keep it up. Who knows? Let me know what you guys think. Coinbase? How's Coinbase doing? Coinbase is up. Is Bitcoin up? So I'm assuming Bitcoin is up with this. Let me see. Bitcoin up to 17.3s. So this must have been fundamental news on Coinbase. What's going on with it? Coinbase sees adjusted EBITDA loss fiscal year 22 to be within $500 million loss guardrail provided in shareholder letter. They announced further restructuring plan, including workforce reduction of almost 1,000 employees, and expect to incur 149 to 163 million in total restructuring expenses. So they're restructuring their company, and that's being seen as a positive right now, and understandably so. I mean, crypto has some optimistic things that we can see over the last couple minutes for sure. So hopefully we get, continued bullish. Abu says, use car bubbles on a slow leak already. Best time to buy will be at the peak of the liquidations. Keep an eye on car dealerships when they're screaming. 100%. Hey, brother, that's exactly what I'm thinking too. Warren Buffett always said it's better to be fearful when others are greedy and greedy when others are fearful. I've talked about this a lot. And really, I was the one saying this when Disney was down. If we look at Disney over the last 180 days, I was saying this. Disney got down to 84. I was telling people, hey, look, in my opinion, this is objectively cheap. It's objectively valuable down here. It's gonna bounce higher than this. And a lot of people let a lot of things get in their way of reason here. And I think the same thing happened in a lot of the stock market. I think over the last couple months we've had some big discounts, and I think what Abu is saying here is you basically got to wait for the crash. There's going to be a bubble burst. The bubble's going to pop eventually. And when that bubble pops, car prices specifically are going to drop drastically. And again, I'm not saying they're going to go back up. I'm not saying any of this is going to happen. I'm not an investment professional. I might be wildly wrong about all of this, but I don't think it's a bad idea to wait for the correction in the used car market and then just kind of buy up flips. I don't think that's a bad idea. I might do it personally myself. What's up, Yowzer? I voted positive, but after a huge dip in the beginning, begging for profit-taking stuff. Yeah. How about ETH? I like ETH. Yeah, we got Fed boss Powell speaking today. A lot of people's eyes are on the Fed meeting, man. A lot of people are watching this, or a lot of people's eyes are on Powell. Everybody's watching this here. We almost got 300 people in here already before 7. Yeah, 1,000 employee cut, huge. And honestly, that's been the trend lately. One of the trends in the market so far this month in January and last month in December and in November as well has been struggling companies that have been not doing that great in the stock market announcing job cuts. And that has been boosting their price. And that's exactly what's happening with Coinbase right now. If you look at Coinbase here, Coinbase ripped up to over 40s. Again, the problem with Coinbase is simple. Here's my problem with it, is that it's pegged to the price of Bitcoin and other cryptocurrencies, and I don't trust that. I don't trust Bitcoin and other crypto right now. I love crypto. I have a crypto channel. We talk about crypto daily at the crypto channel. The risk though is simple, is that we don't know when the red action is going to stop for Bitcoin. That's the big problem with it, is we don't know when the bleeding is going to stop, so to speak, and I don't trust it until it does. All right, guys. So, and again, the market is, like Pawn said, we do have somewhat of a head and shoulders. Here's Coinbase pulling back right now. We're also looking at BBBY today. BBBY drops earnings in about 35 minutes. So we will cover that too. Yeah, there's a lot of here's the thing though, like so there are 100% a lot of scam tokens and a lot of scams in cryptocurrency. I'll teach you the way to avoid them. As somebody that's been involved and again, I've had people reach out to me trying to get me to promote their crap poo coins, is what they're called. I've had a lot of people reach out to me trying to get me to promote their stuff. What I inevitably have to do is just say no. Kind of like Dare, I just say no, man. I get so many people like running a community like this. I do have people reach out and they're like, "Hey, look, we'll give you a percentage, blah 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 blah," and I always refuse. Like one of the overarching rules I have here for this specific channel is that I will not take money from an individual company trying to promote their stock, and I will not take money from an individual cryptocurrency trying to promote their crypto. Those are the two big rules I have for promoting individual tokens or stocks, really. And I will not take money to promote them. And I think you have to understand, like, you can get exposure to the crypto market, but you shouldn't be buying like obscure tokens that you see some influencer pump up. Like that. You should never be buying obscure tokens that you see some influencer pump up. Look at Coinbase, guys. So Coinbase has completely reversed from the big bullish action that we got, and now we're at 38.50s for coin. So it is completely reversed all the way back down here. Wow. Yeah. Hey, thank you, Louis, my guy. And how many minutes does Powell speak? Right now, it's about 7. Powell speaks in 2 hours. 2 hours and 3 minutes to be exact. Yeah, nobody was paid to promote Bitcoin. Nobody needed to. And that's the thing everybody's got to understand, is that if, like, you see Logan Paul getting in trouble with Crypto Zoo and all this stuff. Like, to be honest, number one is that from my understanding, a lot of these NFT projects are just scamming. Like a lot of them are. Even the big name ones are just, it's going to be hard to get your money back. Especially right now with what the NFT market's doing. Public sentiment has dropped so much in those that they're just scammy right now. So you gotta be careful. Yeah, like I said, y'all don't see me promoting. We have a crypto channel. We talk about crypto a lot. You don't ever see us promote anything in that. We don't even have a sponsor for the crypto channel. We don't have a sponsor. We don't plug even like a brokerage or anything like that. We just kind of keep it simple because crypto market's too full of it. It's too hard to vet those things. I would rather just give people free data. And if you want to sub, it's beginner. It's youtube.com/beginner crypto. But yeah, that's the risk with it. Yeah, 2 hours. Yeah, 100%, Chris. It's one of the reasons, bro, that like we just put everything out there for free. We don't claim to be experts. We don't act like gurus. We don't charge for content. We just kind of give people free data, and we don't claim to be an expert. It's to the point now where like if the SEC messed with me and then left all these other YouTubers and channels, then they would look bad because it's like we're the only ones out here telling people we don't know. We're the only ones out here telling people that we're not experts. We're the only people out here that aren't selling a course on how to make money. And when anybody asks people about crypto or stocks, we tell people we don't know. And again, we're the only people doing it. All right, guys, crypto just pulled back heavy. All right, Bitcoin crypto starting to pop back a little bit here. Yeah, that's what we try to do, man. What's up, Dre and Danny, bro? Hey, my guy. Hold on, let me see. Oh, wait. Did y'all change? I thought Dre and Danny was somebody else, but hey, what's up, Dre and Danny? What's the second step on Top Step? there's two different phases, right? So the first one is just seeing if you can hit their profit target. The second one is you have to buying power. You have to manage buying power. The good thing about Top Step is that if you it's a little bit too early for me to plug one of our sponsors. Number one, they're certainly a sponsor of mine, so I'm definitely biased in their favor. Number one, but number two is like the good thing about them is like you can trade, and if you pass and get funded, like if you get funded, and say you get funded, you get eliminated from your funded account, right? Instead of having to start back over, you start right back at phase 2. So that's like the useful thing. And if you want to check out Top Step, you can look at the link in the description. We appreciate it. It's still a little bit too early for me to plug Top Step, but hey, somebody asked me a question, but yeah. All right, guys. Jerome Powell speaks at 9 a.m. 9 a.m., guys. Tesla's still dipping down here. Coinbase is kind of dragging everything else down with it. Coinbase just broke that low again. Coinbase down at 3630s, guys. 3630s. Still dropping here. So Tesla testing that 119.90 level, guys. Look at that pullback here for Tesla. 119.90 test. There's testing the previous closing price. So testing whether it's going to go red or green on the day for Tesla here. Coinbase dragging us down as well, down under 37s here, under 37s. All right, guys. So Tesla, right at that previous close, the SPY actually starting to bounce back a little bit here, though. So the SPY starting to rebound some now. Kathy Wood crime for what? What was Kathy Wood extended in? Yeah, you can hook your platform up to it, Ricardo. Is what you can do on it. So like it's what's called a connection broker, where you can connect yours to it. Like I can, like for instance, I could connect TD Ameritrade to it if I want to, and just trade off of that. I can connect Top Step to it too, so I can use Top Step with TradingView. So I can sign up to Top Step and then use TradingView as my platform. So it's a connection broker. It's an independent connection broker. Yeah, Tesla dropping under the previous closing price. So Tesla just went red on the day, team. So Tesla now red on the day. And again, we'll see if it continues down, but Tesla just went red on the day. Everything's looking kind of weak now. So we'll see if the market can hold. I think that's an important spot of it too. Who knows if it will. Bitcoin will be $3,000, bro. I don't know if Bitcoin is going to hit 3K. 3K is a little bit cheap for me, man. So, like, I don't know if we're going to hit 3K or not. I hope not. You know, we should all hope not, I think. But yeah, guys, so bear with us. We got about 25 minutes before Bed Bath & Beyond, and I don't know how much this is going to influence the broader market, but here's BBBY. They do drop their earnings today. Expectations are for 236 in losses on 1.42 billion in sales revenue. So we do have BBBY earnings coming out today. All right, so yeah, we got less than 30 minutes before the BBBY earnings come out. We do have wholesale inventories coming out today as well. Tesla did dip under 120s now. SPY still at 386.60s, so SPY still consolidating down there. Bed Bath & Beyond at 170s here. Let me know your expectations for it. We did a poll here. And so we can ask people, we asked people what they thought about the poll coming up. About 46% think we're going to get a negative reaction from this. 46% think we're going to get a negative stock market reaction. 15% think neutral. 39% think we're going to get a positive reaction here. Again, let me know what you guys think here. SPY's still looking pretty weak here, and we will short the market if we need to here, team. So we will short the market if we need to. We are able to short now if we want. I think I'm going to take one position short here, just one. All right, we're in 25 shares short. Very small trade. Nothing major here. Bed Bath & Beyond still breaking down. We got 20 minutes. Tesla still breaking under 119s here. We're at 118.79s for Tesla here too. So Tesla's looking kind of weak as well. All right, so again, we got 25 shares short. We'll maybe add a little bit more if it bounces back potentially here. We don't know 100% though. We're just kind of waiting. All right, we just got to break a lows here. We're up a little bit on our 25 shares. All right, so Bed Bath & Beyond, guys, in 11 minutes. Earnings come out in 11 minutes, team. Or no, I'm sorry, in 28 minutes. My bad. 28 minutes, earnings come out. All right, Tesla back over 119s here. Will Tesla hold over 119? I guess is the real question here. I don't know. Okay, Dialgo spikes. Highly unlikely any positive. Yeah, I mean, we'll see. Sometimes he says some positive things. Like, I've seen Jerome Powell say some good things. I'm not saying he's going to continue, but like sometimes he says some good stuff. It just depends on the situation, and I'm hoping he says some positive things here. But again, of course, it's definitely not guaranteed, and we really don't know what he's going to say. You know, that's why I'm flat ahead of all of it. So we got the breakdown, and then we're bounced back up. We're kind of neutral or flat in this one. Coin short squeeze. Oof, I don't know, man. The problem with Coin is that it had the restructuring announcement where it laid off 1,000 employees and restructured itself. But the problem now with it is that the problem with it now is that it's just kind of flying up there, you know, or it's flying down. So like it didn't hold any of its gains is the big problem here. And it rejected the previous closing price, unfortunately. Yeah, Jerome Powell. I mean, like I said, we don't know what's going to happen here. It's 9 a.m. is when the JP press conference starts, 9 o'clock. So we got a little bit of time. We still got a few hours. Bed Bath & Beyond releases their earnings report in about 15 minutes, roughly, give or take about 15 minutes. Yeah, so it really, King, it really depends on what Bitcoin and other cryptos are doing. The reason I don't invest in stuff like Mara or Riot or other mining companies is simple. It's because they're based off of the price of cryptocurrencies, right? So they're pegged to the price of crypto. If they're pegged to the price of crypto and crypto drops like it could, certainly over the next couple months or, you know, whatever, then it's just going to follow cryptocurrency. You know, the problem I have is like I just never invest in those because outside of Bitcoin, it's very hard to make money. Like basically, okay, if I'm going to invest in Bitcoin, I'm just going to buy Bitcoin. I'm not going to buy a mining company and indirectly get exposure to cryptocurrency. I don't think that makes any sense. I think it makes a lot more sense to just either if I believe Bitcoin is going up long term, I buy Bitcoin. If I don't, then I just don't buy anything. You know, I'm definitely not going to indirectly buy mining companies. Like they're only going to move up if Bitcoin moves up. You know, if Bitcoin moves down like it could, they're going to follow it down, unfortunately. And so, no. 9 a.m. Eastern time. Right now, to put it into perspective, it's 7:15 Eastern Standard Time. So it's 7:15 market time. Or it's 7:15 market time. We still got a lot of time before the Jerome Powell press conference. We still got hours. All right, but yeah, Coinbase is up there trying. All right, Tesla down to 1840s. So Tesla just broke down all the way under 118.50. The SPY still breaking down, and we are shorting it, as you can see, just a little bitty trade. Pawn told us about the head and shoulders this morning, and so we're able to kind of capitalize on that and then short it. Bro, these $5 sit and goes are so soft, bro. They're so soft, man. So anyways, Coinbase up to 38.10s. Man, look at Tesla really break down here. Honestly, this is great for my trade here. So we're going to take some cushion off, or we're going to lock in some profit here since we can. So we just, oh no, we just added more to it. Oops. Did not want to do that. We're going to have to cut this quick. All right, so there we go. We just took half off. All right, so we just took half off there. We'll see what happens. Waiting for the breakdown now. Very nice. Thank you, Pawn. Thank you, bro. I appreciate you. All right, guys. Market's still breaking down. Again, we took a little bit of profit on our short here. Tesla's still dumping down here. We still got 20 shares of the SPY short. Still falling down on the SPY here, so that's nice to see. Jerome Powell's speech is regarding, let me find it. It's on the International Symposium on Central Bank Independence. Oh, yeah, thank you, man. Yeah, it's just a little baby short. That's all right. It's all good. Still break it down here. We could add some more to it. I don't think it's necessary. I'm just going to kick back. All right, Tesla down to 117.50s here. Just looking weak, man. Still in the short. Tesla kind of dragging the market down, which is kind of good for me here. Again, we're the actual Jerome Powell press conference starts at 9 a.m. So we still got a little bit of time ahead of that. All right, still getting the breakdowns here. So we do have Bed Bath & Beyond earnings here, guys. So here's BBBY. Now 170s. Right now, 170s for Bed Bath here. So again, Bed Bath is at 170s. Expectational numbers for Bed Bath & Beyond are for 236 in losses on EPS and then 1.42 billion in sales revenue. So 2.62 in losses, 1.42 billion in sales revenue is what is expected here. Oh, excuse me. All right, so yeah, we still are kind of breaking down a little bit here. Tesla at 117.70s. Yeah, we could short Tesla, but I'm just going to short the market instead. It's easier. All right, so we're starting to get a pop up. I could short some more. I think I'm just going to wait. Again, let me look at the poll numbers here. So the poll numbers state that the poll numbers state that most people here, it looks like, think that we're going to get a negative reaction. So yeah. What do you guys think? Good, bad, positive, negative, dovish, hawkish? What do you guys think? Yeah, market is starting to rebound a little bit. I mean, maybe we should have cut our short already, but it's all good. It doesn't matter too much here. We could let it bounce back up. It's just a small trade regardless. Negative leading up to the Powell speech, then turn. We'll see. Tesla been dropping all morning in pre-market, so Tesla has been falling. Again, we do have Bed Bath & Beyond numbers in about 3 minutes for BBBY numbers. About 3 minutes. No, you can't trade options on Top Step. It's a futures platform, so it's strictly futures trading. But you can day trade, futures is what it really is. Watching Boeing. Hey, good luck, man. Market's starting to come back down a little bit, but the market's been moving up some. How's Boeing doing? All right, guys, less than 2 minutes before the actual Bed Bath & Beyond earnings come out. Getting a little dip. I might add my short back here. So we're going to take our 40 shares back short and then just wait now. So we just added our shares back. All right, we're at 117.80s for Tesla now. So again, I'm shorting this just because we have a cushion already locked in on the day. And so we don't have to really worry about it now. Bed Bath & Beyond comes out with their earnings in about a minute. We're waiting for the data to come out here, and then we'll see what we show. All right, so Bed Bath & Beyond. The actual earnings call for BBBY is scheduled for 8:15 in the morning. But let's watch it. So here he goes. So Bed Bath & Beyond earnings comes out right now. And let's see how much time we got. We got about 10 seconds. All right, there's the Bed Bath & Beyond earnings drop here. We'll see what we show for this. I don't see. All right, so there's the earnings out. Bed Bath & Beyond is tanking down. It's at 160. Let's see if we can find their EPS. Net sales of 1.259 billion. 1.259 billion for net sales for BBBY. They're down 35% in comparable sales decline for sales declines. Gap gross margins. Here, give me 1 second. We'll find the rest of the data for you all. But yeah, so that's the Bed Bath & Beyond earnings. And again, I've been to Bed Bath & Beyond lately. They posted 1.2 1.26 billion in third quarter sales. Third quarter adjusted loss per share of 365, so way bigger than expected here. There is the loss per share amount, way larger than expected here. They put sales of 1.26 billion, so here is their results right now. It's a big number. That's a big miss for Bed Bath & Beyond here. That's a big miss here. They're starting to come back, though, surprisingly enough. Third quarter loss per share of 433. But yeah, man, that's crazy. All right, they're starting to rebound all the way back up, though. But yeah, they missed 1.26 billion, missed the 1.34 billion estimate in terms of sales revenue. 365 missed the 211 estimate. It's surprising they are they're going back up like this, to be honest here. But yeah, they're starting to rip back. Look, 268's here. They're moving. Hey, good for them. My short's starting to do a little bit better too. $167. So they're still technically red from this release. And then look at the SPY all the way back down there. All right, so 170's here. So look at my trade here. We're going to go ahead and take some more profit off on the short. Locked in some more profit, up about $17, a little bit under $20 on the day. But yeah, here is their EPS, which is interesting. I'll say that. It's very interesting. Yeah, what's your favorite buy stock today, guys, and why? Yeah, let me know what your favorite buy stock is today and why, guys. Let me know. Nothing? You're not buying anything ahead of the meeting? All right, guys. Bed Bath & Beyond turning down a little bit here, guys. So pulling back a little bit for Bed Bath. Yeah, we're not taking anything yet. We're just gonna wait for Bed Bath & Beyond numbers to come out. There's Bed Bath & Beyond at 166. We're just gonna wait until Jerome Powell speaks here. We're not gonna take anything ahead of that. We're just gonna sit tight until that happens. And then once we get some type of reaction, then we'll take the opposing trade from that. But we just gotta wait and patiently wait it out now. Powell was surprise market today. Maybe Bitcoin up to 18K. I don't know. What do you guys think Bitcoin's going to hit after this? Yes, Raul. What's up, man? Why are you saying that over and over again? What's up? But there's BBBY numbers at the bottom. Bitcoin going to 10K. Yeah, I think that's possible. Kathy Wood may buy more Tesla. Well, when did she get in? When did Kathy get into Tesla? I guess is the real question. Yeah, so when did Kathy get into Tesla? That ultimately is what fluctuates, or that ultimately is what dictates whether she's making money or whether she's losing money or not. You know, is when she got in. Jerome Powell be hawkish. Yeah, I think a lot of people are expecting that, to be honest here. So a lot of people are expecting him to be bearish and hawkish and have a hawkish tone. And you know, hopefully he doesn't say that stuff. Hopefully he says good things. But like, again, we don't really know here, and we just got to wait it out. The SPY is dropping in anticipation of all this. So the market is falling down leading up to all this stuff. So, you know, we'll see. We'll see. Powell's job is slowing the economics, so hot stock market is what he is not what he wants. Yeah, 100%. But at the same time, though, arguably, YL, it could be that he's already gotten what he wanted to accomplish, and if he has, then you know, there's an argument for potential, you know, dovish tone in what he says, and so there's an argument for both sides of it here, you know. Yeah, I don't know when the actual press conference is going to start. Okay, so yeah, so basically she said that the conference started at 11, but right now we have lunch, so it will start again at 13:35, and you can see the streaming. Okay, gotcha. All right, yeah. So I'm in contact with Susan. Let's see, time in Stockholm. Okay, so basically, yeah, I'm confused here. She said it's going to start at 13:35. All right, so we're just kind of waiting on the thing to start. Jerome Powell's supposed to speak at 9 a.m., guys. So we're watching that. We're also shorting the SPY here. Susan is the organizer for the Jerome Powell speech. So I've just been streaming or messaging her back and forth, kind of trying to make sure we cover this data for you guys like we do. Yeah, Bed Bath & Beyond down to 161s here. Same store sales are down 32%. The consensus was 26% roughly. Here's the number. You can see the data right there. Bed Bath & Beyond Q3 store sales down. Tesla bouncing back up here. I might cut this. I don't know what I'm going to do. I'll just cut it. And we'll lock in. We'll cover another 10 shares here. And then lock in. All right, look at Tesla bounce all the way back up here, team. So Tesla all the way back up to 118.40s. Looks like locking in that little bit of profit was the right move. All right, so they're starting to bounce back up a little bit on Tesla here. Let's see if we hold 118. I think that's a big spot. That's a big level. It's a necessary spot that we want to see here. Is if we can hold that. All right, guys. So first time joining your stream, did you think Bed Bath & Beyond can squeeze like GameStop did when things first come to light? Could it? Sure. Would it? Different story completely. You know, it could squeeze. Would it? The probabilities of it actually squeezing are different, though. You know, so like the could it is a different story than will it. You know. All right, so we are getting some drops here. Tesla rejecting, testing 118s now, 118.03s. All right, so we're still breaking down here. Oh, okay, I got it. Hold on, let me see. We have to make sure this is in English. Hold on.
From the monetary system as a whole.
Okay, yeah. All right, cool. So yeah, we will have Jerome Powell here, 9 a.m. guys. We will be ready. Don't worry. Jerome Powell will be speaking at 9 a.m. We will be streaming the full thing live as it happens, as we do. Hit the notification bell, hit the subscribe button if you haven't yet. We will be covering that live as soon as it happens. So be ready. John, any chance you think Tesla is going to hit 113s today? I mean, it could if we get a lot of bearish. It depends on what JP says here. JP says some really bearish things. Yeah, we're going to get some bearish action. No, the speech starts right now at 7:45. Speech doesn't start for an hour and 15 minutes for Jerome Powell. So we still got time. We got about an hour and 13 minutes before JP speaks. UVXY is a scam. Big money makes so much money on people buying call options. UVXY is a volatility inverse ETF, so it's just going to do the opposite of what the market does. So if the market goes up, UVXY is going to go down. If the market goes down, UVXY is going to go up. And so if you want to short the market, but you don't have a margin account, for instance, that's one of the ways you can do it. Yeah, definitely top 3. Yeah, I don't really look for squeezes, man. I mean, Bed Bath & Beyond, again, as much as I hate to say this, like Bed Bath & Beyond, guys, is over with. Like if you've ever walked into a Bed Bath & Beyond store, nobody's there. Nobody's there, man. Like I made money on the original squeeze for BBBY, but just because you're stuck in a position does not mean it's going to go up. And that's what a lot of people got stuck in this big squeeze. Like, listen, if the person who sparked the squeeze has cut their position already, then, I wouldn't trust it. A lot of people got stuck in this. Like, here's $30. A lot of people are stuck in this, and now they're just so desperate for it to go back up. Confirmation bias is such a strong thing. Like, wanting to believing what you want to happen is such a strong thing. But like the reality of it is, let me look for BBBY. Let's check the short float and stuff like that. BBBY float is about 90 million. Not necessarily a small float. Short float is still pretty high. But like the only way we're going to get a squeeze on BBBY is if something sparks it. Like we need a catalyst spark here for Bed Bath & Beyond. We need something to spark the move up. And unless we get something like that, like a big time investor saying he's buying or something that would cause shorts to get squeezed out, nothing's going to happen here. So you need that. And again, even if it did, like chasing squeezes is kind of like a sucker's bet, to be honest. Like, because like the amount of stuff that you buy trying to find squeezes that don't actually squeeze is going to cause you to be net losing in the long run anyway, doing it, right? So like, yeah, you might be able to catch squeezes eventually, but like eventually you're going to lose money. And the amount that you lose chasing those plays is going to generally be larger than the amount you win when you finally catch one. So I stopped chasing squeezes a long time ago. Like we even had like a squeeze app that would look for short squeezes. But the problem is that squeezes don't happen every day. Like GameStop, AMC, Bed Bath & Beyond happened. And people thought that squeezes were just this big common theme. They thought that just because everything had a high short float, that it was going to get squeezed up. And it's just not like that. The other problem with trades like this is that people take these trades and they think squeezes last forever. And they get pressured by a bunch of dummies who tell them never to sell, don't sell. So when their opportune time to sell hits and they're actually up big, a lot of them choose not to sell out of some weird skewed sense of loyalty to the company. It's like, bro, if y'all are chasing squeezes, you better take profit into that move. Like I made money on Bed Bath & Beyond into the spike it had. So we sold up here. Like we sold at like 20s. For Bed Bath & Beyond. We didn't sit on this until it hit 160s. I mean, every single squeeze in history has turned out this way, including GameStop. Here's GameStop. Here's AMC. There's Bed Bath & Beyond. Every chart looks exactly the same. So it's like, I get it. Some people are stuck in the 20s and 30s and they're so desperate for it to come back. But when you look at Bed Bath & Beyond fundamentally, like if you've ever, like, trust me, my wife likes Bed Bath & Beyond. We've gone to Bed Bath & Beyond over 2 times in the last couple months. Every single time I go there, there's nobody there. There's nobody there. Like it is empty. Like we're the only people in that store every time we go. And it's not like it's in a slow area. It's right next to a Best Buy. But every time we go in there, it's empty. And so I'm skeptical of a company like that. I think Amazon is making Bed Bath & Beyond obsolete. That's the truth. I think Amazon and mail order shippers are causing retail brick and mortar stores like this to just go obsolete. Yeah, a lot of people started trading when GameStops happened, and they don't really understand. Like, they don't really understand. They think everything squeezes. A lot of them get talked into the whole, oh, it's a conspiracy with manipulation with the hedge funds. Like, bro, I'm telling you, if you're in a stock where people are crying manipulation, you're getting suckered. 100%. Like, if you're in a stock and people are saying, hey, it would have gone up if it wasn't for manipulation, you're getting suckered into holding something that you probably shouldn't be. Just buy blue chips, man. Just buy large cap companies. Like, blue chips are going to go up long term. Like, very easy to predict those. Disney, Google, Apple, Amazon. Those companies over a 10-year period are going to go up. Not an investment professional. Maybe I'm wrong here. I seriously don't think I am. But buy blue chips. They go up long term. Penny stocks, any stock under $10, any mid cap even is a risk. And people think they have to buy these because their account's small. It's like, bro, you could buy 5 shares of Disney and get the same thing that you're going to get in a lot of the penny stocks, but the odds are going to be in your favor. I know people don't like hearing it. A lot of people get mad at me for saying it, but I'm not going to stop saying it because people need to hear this. Like, don't get suckered, man. Just buy good companies. Yeah, Cohen did the GOAT rug pull. I understand Cohen too, bro. Listen, if you're up millions and millions of dollars in something, I'm going to take profit too. Like, if I'm Cohen, I'm taking profit instantly. I probably wouldn't have held as long as he did. And so I'm not mad at Cohen. Let him do his thing. He made his money, I saw a video that showed top companies from like 10 years ago, and they are not the same companies 10 years later. Sure, but Apple will be, Amazon will be, Disney will be, for sure. Those 3 companies, Amazon probably will be, Google probably will be. And so, sure, that might be the case. There's always going to be emerging tech companies that pop up and spring up. But generally, those stocks are going to go up long term, regardless of whether they're the top companies or not. Generally speaking, those companies are going to go up long term. We don't know for sure, but I think Disney's been around for over a century now. Apple has ingrained itself in the mobile phone market so much to where it's like they've got the lock on young people. Like, Apple, I have a 13-year-old daughter, right? She would never even consider getting a Samsung ever. You know why? Is because Apple did something incredibly smart. Apple made it to where if you don't have an Apple device, you cannot be in group chats, right? And what do young people do? Young people are all about that group chat life, And so if you don't have an Apple phone, you can't be in your friend's group chat. And young people do not want to miss out. They do not want to miss out on that. My daughter would never. I could buy my daughter the coolest Samsung phone ever, and she would not want to use it. And so, because of that, Apple's going to be fine. Apple is doing, and again, you can get mad at them for it. I understand it. They're making smart business moves, and that's going to protect them, generationally. Yeah, their Bed Bath & Beyond is going out of business for sure, like without question. Again, they are a victim to the times that we're currently in, which is that online sales have rendered a lot of these brick and mortar stores obsolete. Are you going to go to Bed Bath & Beyond and walk around the store? No. Some people might say, hey, I like going to the stores, and that's true, but you need to understand you are an outlier in that situation. A large majority of people are just going to have this stuff shipped to them now. Technology has improved to a point where we don't need Bed Bath & Beyond retail stores anymore. And so investing in Bed Bath & Beyond, like genuinely investing, like fundamentally investing and holding long term, is investing in Blockbuster. It's investing in a dinosaur. Don't get talked into it by a bunch of people who probably only started trading a year or two ago in the GameStop boom. And now they're trying to tell you not to sell, terrible companies. Again, I don't know what to do. Maybe I'm wrong. Maybe Bed Bath & Beyond flies up for all I know. Maybe so. Again, not an investment professional, but like that's probably what's going to happen is that over the next year, Bed Bath & Beyond is going to go out of business. It might get delisted. It might go to Pink Sheets. I don't know. And maybe it's going to try to pull some online squeeze play where it announces a different business model or Chapter 11 reorganizational bankruptcy or whatever it does here. I don't know. But all I know is I'm not holding Bed Bath & Beyond. The risk is too high. No, it's not easy. You might be able to, Levi, but it's not easy. It's much more difficult. And I'm telling you, the connectability with Android is definitely less, and young people don't want to miss out on stuff, for sure. J Powell speaks at 9 a.m. in about an hour. We will stream the whole thing live right here. John, I believe you are biased towards blue chips because you believe you have an edge there. Well, yeah, I mean, I obviously believe I have an edge there for sure. But look, regardless of any of this, okay, like here's the easiest way to put this. The S&P 500, which is made up solely of blue chip companies, large cap blue chip companies, averages 8 to 12% a year. Okay. The safest money to make in markets, is buying blue chips and holding long term. And now it's not any blue chip. Like most of the time, the mistake people make is that they buy mid caps, and a lot of mid caps are going to fail. Like Peloton, Beyond Meat, stuff like that. Like a lot of them, Neo to a certain extent. Like a lot of these companies are going to fail. And that's the big mistake people make. But you get established in healthy long term companies. You know, Apple, Disney. You know, I mean, you can argue that Disney and Apple are going to fail long term, but regardless of whether they perform the best out of anything else or they just, you know, they do okay, they're still going to generally be green over a 10-year period. And I don't think that's really arguable. Again, I think people want to talk themselves out of investing in these companies because they want to gamble on penny stocks, to be honest. And I think that the easiest money to make in markets is buying blue chips and holding for years. It's not because of an edge that I have. I think Warren Buffett has proved this. Like Warren Buffett, value investing is the single most effective form of trading or investing in the world. If you diversify well enough into blue chip healthy companies and you sit, you are almost guaranteed to make money long term. Almost guaranteed. It's the single most effective trading strategy there is. And don't get tricked into thinking that somehow investing in these small cap, terrible penny stock companies who have such a low probability of success is somehow better than investing in blue chip companies like Disney or Google or Amazon. You know, again, that's a sucker's bet. And new traders who, you know, look for squeezes and stuff like take that. Those are sucker's bets. Right, 100% Veer. That's exactly right, brother. No, I don't know about the stats, K, but what I am saying here as an example of the problem with mid caps is like the problem with mid caps is that most of them will probably be fine too, but most is not good enough. You know, like a lot of mid caps are going to fail, you know, so it's like say you're diversified and say you invest in 4 different mid caps, one and say 25% of those, 1 out of 4 fail and you lose everything. Right, that's still going to make it very difficult to make money long term if 1 out of 4, if 25% of your holdings just goes to zero or drops 80-90%. You know what I mean? Again, you got to think about long term health and success, right? Disney, Star Wars, owns Marvel, owns ESPN, owns Disney Plus, which is growing regardless of the negative media. You know, Disney Plus is growing as well. Disney's going to be fine long term. Same thing with Amazon. Amazon, I would say a large majority of the world uses Amazon on a weekly basis, right? Something like that is so ingrained into what our everyday life is going to be fine as well. Apple, same thing, you know, dominating the American phone market. I'm not saying there's not going to be another competitor to Apple or that Samsung's not going to creep in, but overall, Apple's going to be fine over the long term as well, you know? And so I think you got to find companies like that. Now you can invest in more speculative mid caps and stuff like that, but you got to understand what you're doing is that you're adding risk to your trading. And for me, I want sure things. I don't want risk. Yeah. Again, an example of mid-cap risk is two companies that I've been very vocal about not liking over the last couple of years. Peloton, they're literally selling virtual reality rowing machines for thousands of dollars. They're solving a problem that people don't have. It's like selling a virtual reality toothbrush. It doesn't mean anything. Like, I'm not saying that a virtual reality rowing machine isn't cool, but like the amount of people that are going to spend thousands of dollars on a VR rowing machine is very small. It's a virtual reality bicycle company. The amount of people who would rather have a real bicycle over a virtual reality bicycle is higher. And so because of that, I've been very vocal about not liking Peloton, and the risks of it are simple. Here's a couple year chart. You got in at 150s, 160s, 170s. You are down huge 80+% on this type of trade. Same thing with Beyond Meat. Here's BYND. You get in at the 200, 180, 150 level, you're down huge percentages, 90%. So that's the risk with mid caps, is that people overestimate the likelihood of success for these companies. I'm not saying you can't make money with them, but holding them long term is certainly risky. But it's also a big risk, big reward game here. So it's like, yeah, you can lose a lot of money with mid caps. You can also make a bunch of money. The ones that do succeed, sometimes they can make big, 100x potential. And so, yeah, I guess it's all preference. But for me personally, I just stick with blue chips when I'm holding anything. Anything I hold over 2 or 3 weeks, it's going to be a blue chip company. I'm not going to do that with any cheap company, unless it's like right now I'm holding AMC, but I'm in AMC and it's very small very small trades, just because it's so down. And if we do make a move up, great. If we don't, it's not the end of the world. We're holding like 10 shares. It's Eastern time, so it's 9 a.m. Eastern Standard Time, Chris. And so you just go to Google. Google's your friend there. Yeah, I hold swings in Disney, Google, Amazon, specifically low PE blue chips. Oh, I had a donation. My bad, guys. I didn't even see it, man. Who donated? Oh, my guy. Thank you, Clayton. Hey, thank you, brother. Always donating to me, man. I appreciate it, bro. You're the realest, man. Thank you so much. Shout out to Clayton, man, with the $3 donation. Thank you, brother. Again, I mean, listen, people can argue against investing in blue chips, right? But that's a silly argument. Again, if you're really genuinely arguing against investing in blue chip companies, then no offense, you don't really understand the stock market. The easiest money in the world is investing in blue chip companies. And when I say investing, I genuinely mean investing. I mean holding for 5 or 10 years. It's the easiest money to make in the world. You buy and you sit. Even if these companies are not doing great, you're still at minimum going to be up at least 50% generally over a 5 or 10 year period in these companies. Again, 8 to 12% a year from the S&P 500. Love you.
Love you.
Have a good day. Where's your brother?
He's coming.
All right. I've heard you say 20% returns is really good. What would you say if I told you I returned 30% last year? I think 30% is decent. 30% is not bad. It's doing better than the S&P 500, so that's solid. And again, I'm going to preface everything else I'm about to say with, I'm not saying people can't make money investing in penny stocks, but I think making money consistently investing in penny stocks is a different story. Like anybody can have a good year. Consistently having good year after good year after good year investing in penny stocks is a completely different story. People can get lucky and make money, but it doesn't mean they're going to be able to consistently do it. Okay, got you. Yeah. Hey, well, that's great. 30% is great then, Yeah. I never entered anything over 7. I mean, do your thing, brother. I'm not mad at that. Like I said, there's going to be outliers, but I think the problem, and here's the real problem, and again, I'm as much as I can do. Hold on. Yeah, I mean, Indigo. Like I said, anybody that I would never subscribe to anybody that's actually having bots go around and spam people's YouTube channel, like Indigo Point here. I would never subscribe to a channel like that. Like that means that they're unethical. They're just spamming people. They're burning bridges. Like that's not how you grow on YouTube. The way you grow on YouTube is putting out content people want to see, not generic content, but content people actually want to see. If you're having to spam people's YouTube channel and go to YouTube streams and plug your stuff in the chat, then you're not being ethical. Yeah, Bed Bath & Beyond. Listen, I hope it squeezes back up here. I'd like the hype from it. Yeah, I mean, like I said, guys, the truth is the easiest money to make in market is value investing blue chip companies. Easiest money to make. Don't underestimate the edge that people have there. It's almost guaranteed money if you diversify well enough and sit for 5 years plus in blue chip healthy companies. Again, it can't be mid caps, it can't be small caps. It needs to be large blue chip companies where not just that low PE companies are preferable. So low price to earning ratio companies are preferable, but profound edge that you have there. Again, if Warren Buffett showed anything, that's the edge. All right, Tesla up to 119s here. We're shorting the SPY here. We'll see if we get anything good from it. Hey, thank you, David. Yeah, it's all good, brother. Hey, yes, sir. Like I said, man, I understand having different trading styles, and so it's all good, man. All right, guys, we got about 50 minutes here. We are going to put it in sub-only mode. So we are going to throw it in sub-only mode. So if you have not already, hit the subscribe button, hit the notification bell. We appreciate it. We cover all these streams, speeches, all that good stuff live right here. No, listen, Pep, just to put this into perspective, Pep, I want you to understand something here, okay? I have an Android. Like I literally have an Android, brother. I've got the Z Fold. I love Android. I would never get an Apple personally myself. I'm not hating on Android at all. I love Google. I think Google's low PE as well. Samsung's got amazing phones that are relatively free to use in terms of downloadable stuff. Like there's the Samsung and Android phones are so much better, in my opinion. But regardless of my own personal preference, Apple is dominating the US market for sure. And the US market is huge. Now, again, Android and Google are going to be fine long term. Samsung are going to be fine long term as well. But what I'm trying to say is like Apple dominates the young people market here for sure. Overseas, of course, people use Samsung and Google. Apple's growing overseas though too. But yeah, man, I have an Android phone, brother. Like I'm not an Android hater. I'm not putting out misinformation on Android. What I'm saying is that Apple has designed their phone connectivity and usage to make it exclusive, make a lot of the stuff exclusive to Apple, and so that young people want Apple. And I don't think that's misinformation. I think that's truth. Bed Bath & Beyond has massive shorts. Yeah, 100%. BBBY is shorted until oblivion for sure. We're going to just cut this and get out and wait for the actual press conference to start. Tesla up to 119.20s here. So Tesla up to 119.20s. And again, y'all, we are in the sub-only mode. If you haven't already, hit the sub button, hit the notification bell. We appreciate you all. Yeah, the flicker, I can fix it. There you go. No more flicker. Bed Bath & Beyond started to rip up. It's at 180s, now 181s. All right, guys, we got about 800 people here ahead of the Jerome Powell conference. Do you think Tesla is overvalued? Where it is now, it's arguable. If we look at the PE ratio for Tesla, for instance, here, the PE ratio of Tesla is about 37. And so in terms of PE, which is price to earnings, it's not that bad. It's not low PE. So it's not anything under 30 is okay. Under 25 is preferable for PE ratios. So 37, it's definitely not as bad as some other companies. Like other companies have like 50, 70. But it's still not, it's not what would be considered a cheap value PE ratio. It's still a little high. If the dollar index hits 103.80s, that's where I'm buying the dip. The Fed is likely to drive the market down because they specifically stated that needs to happen to achieve their goals. No way they go positive unless they're. Well, I mean, but what the argument, Kay, is that has that already happened? I mean, if you look at the last year of price action, we've gone down from 470 down to 380s, 390s here. So the market has dropped profoundly over the last year. And so it's a little bit more nuanced than that. I mean, the only other argument is, hey, have we dropped enough already? Because we already dropped pretty big here. You can look at the last year of price action. You can look at a weekly chart to see, this is the contraction we've had in market activity since last year. And so we've dropped pretty big here. The question is, well, is that enough? I will say this. Inflationary metrics have been lower and better over the last couple months. They've been slowly dropping more and more. CPI last time came in lower than expected. PPI came in lower than expected. Jobless claims came in higher than expected. Unemployment came in lower than expected. So that's not great. But again, the question is, have we dropped enough already? And I don't know. I really don't know. Shop PE is 293s. Is it really? Shopify PE is 290s. Yeah, I would never invest in Shopify. The reason I won't invest in Shopify is simple. They don't even have their PE listed. Hey, buddy. Man, looking handsome, bro. Love you, man. Have a good day, dude. Be safe, okay? You like my fire? All right, bud. So you doing golf today? Mm-hmm. Golf is cool, man. I'm terrible at it, but all right, Bed Bath & Beyond at 180s, guys. Tesla rejecting at the volume weighted average price. Look at the VWAP here on Tesla. So that's kind of what we're rejecting here. We rejected right off of that VWAP area here, look. So again, the question is, do we hold down or what happens now? Golf better than trading? Yeah, Bed Bath & Beyond earnings are already out. Again, BBBY earnings, they came in pretty bad for their earnings report. Bed Bath & Beyond had worse than expected earnings. They dropped. Love you, buddy. Have a good day at school, man. Love you, bud. All right. Bed Bath & Beyond earnings had 365 loss per share in EPS, way worse than the 211 estimate. Sales revenue of 1.259 billion versus 1.87 billion a year ago and 1.34 billion last time. So worse than expected numbers all the way around. Here's the Bed Bath & Beyond data. So worse numbers all the way around. I'm surprised it's moving up, to be honest. Can you explain PE ratio in greater detail? PE is price over earnings. And so the way you calculate it is you look at the last, I like the trailing PE method. So the way you calculate it is you look at the last 4 EPS releases, and then you calculate, the formula is you add up the last 4 quarters of EPS, right? So you add up the last 4 quarters of EPS, and then you take the price and you divide it by whatever that number is. And that'll give you the PE ratio. So what it really is judging with PE, what PE ratios really are judging are, how cheap the price is relative to how much money it makes, right? So what the price is versus how much money it makes. Because of that, it's a very relevant metric for long-term investing and trading. Yeah, I'm not shorting BBBY at all. Yeah, I think it's definitely risky to short. But all right, guys. So the market is pulling all the way back down and testing the lows of the day here. Look at this. So the market's coming down here, testing the lows of the day here. I don't know if we're going to get any other better price action here, but the market is starting to break down now. Let's see if we hold the 386 spot. Can y'all not hear the music? Can y'all really not hear the music? I've been playing it for the last few hours. Can you hear music, guys? Man, my bad if you can. I've been listening to it all morning. Okay, yeah, y'all can hear it. My bad. All right, cool. Yeah, Tesla's up there. I could short the market a little bit more, but okay, cool. D said John, I bought 4,500 Bed Bath & Beyond shares yesterday looking for a little swing profit. I can stand a small hot play money. What would you do? Yeah, not an investment professional, not liable. If you lose, you always got to make your own assessment and trade responsibly. Now, again, I have no idea what Bed Bath & Beyond will do. It might go up, it might go down, it might go sideways. I'm not liable. I certainly don't want you to copy me or follow me in any way. Not an investment professional. Don't sue me. Not liable for any losses. Now, with all that said and out the way, if I was in Bed Bath & Beyond, I would look for a pop-up, and I would immediately take some profit into it as soon as I was up any significant amount, and then I would be a little bit more loose with the rest of the shares in case it does make a big parabolic move up. But I'm also not going to diamond hands it. I would, any significant profit I would take, and maybe hold a small percentage of what the original trade was, just in case it goes parabolic. But I think that's a low probability. Yeah, all good, D. Any thought for CPI on Thursday? Which number would make the market green? Well, anything lower than expected would make the market go up. Expectations for CPI on Thursday are for 6.5% is what's expected for CPI. 6.5% on the month is expected to show up at minus 0.1%. So lower is better. So if we showed up at like 6.2, 6.1, 6.3, or 6.4 even, would still probably cause positive responses in markets. So like what good numbers would be anything less than 6.5 is going to be seen as positive. Anything lesser than minus 0.1. So we do minus 0.2, minus 0.3, minus 0.4. We're probably going to get good responses in markets. If we do less than 6.5, we do 6.4, 6.3, 6.2, so forth. We're probably going to go up in market activity, but we'll see. Yeah, all good, man. All right, guys. So try to be patient here. We still got about 40 minutes before the Jerome Powell press conference comes out. Again, conference starts at 9 a.m. We will be streaming the whole thing live. Hit the sub button if you haven't already. We appreciate you guys. Starting to bounce back up a little bit. I kind of want to short this, and I might actually. So we're going to take 50 shares short right now in the SPY. Little head and shoulders on a shorter term time frame. Looks like I was wrong, though. Luckily, we have some cushion. I'll add another 25 shares if we need to. But I'll also cut it if we push up too much, like specifically over the volume weighted average price. Even if CPI numbers miss, if it misses slightly, market could go either way. No, I don't think so. I think if it misses at all, I think even if it comes in neutral, it's bad, right? So I think if we miss at all, if we come in higher than expected, higher than 6.5%, even if it's 6.6%, which some analysts are expecting, I think we're going to drop. So I think anything over 6.5%, the market's going to come down. And so with that, I hope we come in under that. I don't want to see the market come down. I want to see the market do well, but who knows? Hey John, I had to get out the market completely. I've been wrong on everything past 2 months. I'm curious how you've been trading this choppiness. Day trading's been back and forth. Swing trading, we've been making our money. We were making money sometimes. We lost a little bit of money too. It just depends on which stock. Would you rather see the market future 1 year from stock market or get $1 million now? Oh, I'd rather see the future for sure, without question. I'd rather see the future. Hey, what's up, Kevin? I could make far more than $1 million if I know the future of the stock market, Hey, what's up, Clayton? All right, guys, market's starting to pop up. I'm going to add one more 25 share lot to this, and then we'll cut it if it breaks over the volume weighted average price, specifically right there. We'll let it work. Bed Bath & Beyond is still pretty neutral from the release, which is honestly better than it could be. What do you think about Bitcoin's reaction today? It depends on what he says, man. It really depends on what Jerome Powell says. If Jerome Powell says positive things, Bitcoin will react positively, obviously. If he says negative things, Bitcoin's going to follow the market. And so SPY goes up, Bitcoin goes up. SPY goes down, Bitcoin goes down. That's basically what's going to go on. Oh, that's a little bit too theoretical, David, and I don't know. Hey, what's up, buy stocks? Hey, thank you, man. Yeah, before 20K. Yeah, we've been growing crazy fast over the last couple months, to be honest here. Last few months has been amazing. Our viewership has gone up dramatically too. A lot of the channels that, started when I started aren't around anymore. So, but again, I mean, I'm genuinely happy that I built the channel like I did. A lot of gurus just didn't survive, and we just try to put everything out there for free. We don't claim to be an expert. I don't act like a guru. I don't charge for content. We don't sell any actual course or anything like that. Everything's free here. And in hindsight, I'm very glad we did that because it's just so much better, to run a community like that without pressure. I can tell people, hey, I'm not an expert. I'm not even claiming to be a good trader, and just enjoy my trading. All right, so we're going to take a little bit off on the SPY here. So again, we shorted it at that top. Take a little bit more. We only have 25 shares left. We're up a little bit under $20. Small little trades here. And again, we're not taking anything major. We got about 36 minutes until the actual press conference. So we still got some time. But you are guru, John? No, I'm not. Gurus claim to be experts, claim to be great. I don't claim to be anything. I tell people I'm not great. I'm not an expert. I don't want people to copy me. I don't know what's going to happen. Gurus are the opposite. No, CPI is Thursday. Hey, thank you, Mac. Hey, we appreciate you guys too. Thank you so much. Hey, what's up, Tiny? All right, so yeah, we are shorting the market. We have been all morning from a little head and shoulders pattern there, but who wins the World Series next year, guys? The big question of the day. I'm going with maybe the Padres. Padres have got a dream team. I'm a little bit jealous. I mean, I think my Astros are going to win because I just think we're the best team in baseball for sure. Definitely last year we were, but I think next year we'll be solid too. Or this upcoming year, I think we'll be solid too. Hey, thank you. Thank you, Snow. My guy, thank you, brother. He said, this is the only YouTube channel I watch. Honest guy with a one-time market update. Skip this man a sub. Hey, thank you, brother. So what are we looking for when Jerome Powell speaks? We're looking for comments that could insinuate that inflation is getting better. Comments that could insinuate that we're performing better than normal. All right, love you. But yeah, we're looking for optimistic comments that insinuate that the market is getting better, that inflation is getting better, that prices are dropping, that market upward potential is there. That's essentially what we're looking for. All right, so again, we're right at this bottom. We're going to take a little bit more off, just lock some in, and then just chill here and wait. Cardinals? I don't know about the Cardinals, brother. Padres? Listen. Juan Soto, one of my favorite players. Honestly, I'm an Astros fan. I'm in Houston. I've been a fan of Juan Soto since he hit those homers in the World Series against us in what was it, 2019? Yeah, I've been a fan of him since then. Yeah, profit. Locking in profit is the single. Locking in profit is something that you want to learn to do. Trading is a conditioning game, so you just want to condition yourself, right? So repetition is key in building up your systems. So you just need to repeat it enough to where the right decisions become second nature, and you don't have to stress about them or think about them as much. So with that in mind, learn to take profit. If I'm up dramatically in anything, I'm locking in profit very fast. If you don't, you're missing out on the opportunity. And I think part of the trading culture that's happened over the last 3 years since the GameStop craziness has been diamond hands, never sell. A lot of people pressuring people to not sell their positions. But you really have to ask yourself, if people are telling you not to sell something, they don't have your best interest at heart. You're your own best advocate, and you're looking out for yourself the most over anybody else. And so, generally speaking, there's nothing wrong with being up big in something, taking profit, and then holding 20% of the position and being loose with the last 20%, and then letting that work for you in a big way. That's going to be a much more profitable trading strategy than just buying and sitting on stuff and never selling. But of course, it depends on what it is. Blue chips, long term, different story. But in terms of day trading, swing trading, you got to learn to take profit. Yeah, we got 30 minutes, guys. What's up, Tiny? What's going on in the market today? Well, we got a Jerome Powell speech. What it really is, it's Jerome Powell is speaking, to put it into perspective, on the International Symposium on Central Bank Independence. So, and we're watching it right now.
Bringing the membership together in order to try.
Jerome Powell's not up yet, but they're speaking. So we're just waiting here. But yeah, he's supposed to speak at 9 o'clock. It is 8:30 right now, so we still got a few. And we'll start streaming in maybe 5 or 10 minutes before that. Hey, thank you, Umberto. Thank you, brother. I mean, whether you can trade in the U.S. is different for everybody. So not sure about, check with your brokerages, check with platforms. It depends. Wait, I thought you were top 3. Oh, we're definitely top 3. But yeah. Yeah, Soto. Yeah. So does Young still, man. No, this isn't CPI. CPI is Thursday, so subscribe, guys. Listen, thousands of people tune in. We got over 1,000 people here now. Thousands of people show up for these streams because we cover the data very quickly. We cover all the major economic data. So if you want to know what's going on in economics and stocks, subscribe to this channel. Like, well, we cover all the big stuff. You know, we cover CPI, PPI, jobless claims, unemployment, non-farm payroll data, all the big earnings reports for big companies like Apple, Disney, Google, Netflix, Amazon. We stream every Jerome Powell press conference. We cover the FOMC rate hike decision as soon as it comes out, and then we stream the whole press conference afterwards. And so this is the one-stop shop for all your economic trading, stock market stuff, and we cover it all here. And so subscribe if you haven't. We certainly appreciate it. Market's testing lows here. So again, we're only at 15 shares left, but again, we could be a little bit loose on it. Small little trade. 1,700, maybe. For Jerome Powell streams, we usually get something like that. We'll get a couple thousand here, probably, maybe more, maybe less. It depends. But my guess is we'll get 2,400, maybe more than that during the actual press conference. But yeah, so he's speaking on the International Symposium of Central Bank Independence. It marks the end of Stephens Thomas, governor of Riksbank. Senior central bank officials and prominent academics will participate in 4 panels that address central bank independence from various angles: climate, payments, mandates, and global policy coordination. Hey, 10K views. Hey, I hope so, bro. I hope so. Yeah, thank you, man. I mean, we do ads here. Like I'm sponsored by Top Step, and Top Step is a really, really cool funded program for futures. So what Top Step does is Top Step, they give you a demo here. And if you can hit the target on their demo, and they are a sponsor of mine, and so I'm certainly biased in their favor. But what they do is they give you a demo, and if you can hit their targets while following their rules, they fund you between 50 to 150K with a 90% split. It's the most legitimate futures funded program in the world. They pay out millions of dollars in actual withdrawals every year. They fund thousands of traders a year. They've been around for over a decade in over 100 countries you can use this in. And again, regardless of whether you get funded or not, I think most people are not going to be able to get funded, to be honest here. I think most people are not going to be able to get funded because simply most traders lose money. But regardless of whether you get funded, it's an amazing test of your skill, and it builds you into a better trader. The base one's 50K, right? So the price of it is less than 150 bucks a month. If you use my link, it's less than 150 bucks a month. Your job is to hit 3K on that 50K demo account without losing $2,000 total or $1,000 a day, which is a really reasonable ratio. It's a 2 to 3 ratio. So it's not some crazy, ridiculous ratio. And there's 2 different phases, but if you pass that, you get a 90% profit split. They are the most legit one in the world. You get to keep 5,000 of your first money too, like your first profit. You get to keep 5K of your first one. 90-10 split, fast payouts. Again, it's the most legit futures funded program in the world that everybody else essentially copies off of. They have the best infrastructure. They are the most legit in my opinion. And if you want to check them out, great way to help support the channel. It genuinely builds you into a better trader regardless of whether you get funded or not, and it's cheap. It's less than 150 bucks a month. And so again, if you want to check it out, here is the link. Yeah, we've been streaming for over 2 hours now. This is the first plug we've done. So this is the first advertisement we've done. And again, I mean, I hope you guys understand, like, just like the radio does what, a commercial every 30 or 45 minutes. We do as well. You know, that's the way we keep everything free. We don't sell a course. You know, we just kind of subsidize the channel through sponsors. And Top Step is a legit one. It builds you into a better trader. A lot of people don't like it because frankly, they're not great traders. And so, you know, they don't get funded and then they're like, oh, but most people are going to lose. You know, most people don't trade well. Most people are losing traders, guys. But what the edge of Top Step is that it builds you into a better trader by testing your skill. Trading is about learning to perform under pressure and conditioning yourself through that. And I think Top Step is a unique tool that allows you to do that and helps give you an edge. How long have you been trading? About 6 years. You know, this Thinkorswim account right here has got about 150,000 in buying power. So you can kind of see I took 75 shares short of the SPY. And again, if you think it's paper or whatever, like I can't short on paper and I can't trade in pre-market on paper, right? So just 75 shares of the SPY, like I took earlier, 387. It would be about 30 grand. You know, but we've got about 150K in buying power here on TOS. Bed Bath & Beyond coming back down. Tesla testing the VWAP here. At 15, man, I was a big nerd, bro. Like, I was a huge nerd at 15, man. Like, when I was 15, I remember I was like, not 15, when I was 15, I was out doing stuff with friends. But when I was like 11, 12, 13, I would download Pokemon emulators and ROMs, as well as N64 emulators and ROMs on my computer. Never paid for a video game. And I was really into video games. I remember I would like build websites. I would download the Star Wars movies illegally. And my dad got a cease and desist letter from whatever studio it was. I don't know if it was Warner Bros. And I got in like a lot of trouble when I was 12 because from that. But I had saw all the prequels before they came out in theaters. And so I'm kind of bummed I did that, though. They weren't great, but I'm kind of bummed. I would have liked to just see them in theaters. But apparently I was like accidentally streaming the movie and doing something else. So movie theaters didn't like it. It was LimeWire days. You know, I'm struggling to get funded, but still like it. Yeah, I mean, figured I can only be good with micros. Minis too stressful and tough with a 1,000 limit. 100%, Lewis. I mean, just take it slow, brother. That's the best way. No crypto art. It's just futures, man. All right, guys, we got about 20 minutes. Yeah, micros. I tried trading the regular, Lewis. The problem with the regular is that it just goes against you too quickly. Like I found my sweet spot with the micros is like 5 contracts of the micros. Five contracts of the micros and futures is the equivalent of half of the regular E-mini, right? So it's the equivalent sizing of half of the regular E-mini, and that's my sweet spot. Is roughly half the size of the regular E-mini is what I do well. I'm gonna go ahead and cut this. And just lock in the profit here. I see Tesla starting to pop back up, and I don't like that. That generally is going to drag the market up sometimes. So I don't feel like getting stuck in a bounce back. And maybe it's the wrong move, but we're just going to lock in the profit while we have it. Hey, what's up, mister? Yeah, for sure, Conrad. 100%, man. All right, guys, we got 20 minutes before the JP conference here. We're sitting here watching it now. I mean, it's up. Yeah, we'll put the actual conference up with 10 minutes to go to make sure we don't miss Jerome Powell. But
institutions and strong policy.
Hey, nice, mister. Congrats, man. Hey, what's up, Marty? Yeah, we trade crypto. I'm pretty flat in everything right now in cryptocurrency. I just don't trust it. One thing I have gotten the itch to do, though, lately is try out short-term crypto trading through Chart Prime. You know, Chart Prime is a sponsor of mine. And I think using it in cryptocurrency, like I think there's a lot of short-term traders in crypto, but I think Chart Prime is surprisingly accurate. Like, look, here's Chart Prime here, and they're a sponsor of mine, so I'm definitely biased in their favor too. But like, here's a 1-minute chart on Bitcoin. You know, like look how accurate their support and resistance numbers are. So like, look, they added this new range resistance, so you can see the top of the range. And so like, I know a lot of traders copy trade, and they get people to follow them, and they make money doing copy trading. And I think a lot of them are using something like this. Like, look, just look how accurate it is. Possible reversal up, big bounce over like a 10 or 15-minute period. Reversal down, you get drops over like a 5 or 10-minute period. Bearish hammer, you get big drops. Possible reversal up. This one was wrong, but another reversal down, big drops. And again, if you use it where you get bearish engulfing candle here, big drops over like a 10-minute period. Possible reversal down, big drops. And so I've been thinking about using Chart Prime in this specific way in cryptocurrency and trying it out in crypto, because I think, and you can use this, you can use Chart Prime in stocks, crypto, Forex, futures, all that different stuff. And it's surprisingly accurate. And you can use it on any time frame as well. So I've thought about using it on short-term crypto trading with maybe a little bit of a bearish bias. Of course, I can't guarantee you're going to make money. And again, Chart Prime is a sponsor of mine, but they're pretty cheap. Like the base one's less than $60 a month. It's like 40 something, I think, or 50 something if you use my link. But yeah, I'm definitely biased in their favor. But I've thought about using them, and maybe I'll do a video on that. I think that would be a good video idea of just trying short-term crypto trading and just kind of day trading or swing trading crypto based off of the Chart Prime indicators. Because I think if I do so, and again, I can't confirm this, but I think if I do so, I should at least have over 50% accuracy. And so there might be some edge, you know. And if I use copy trading, which is a lot of what crypto is, then there's other, it's even more profitable, I think. But it'll be, if you have thoughts on this, let me know. But I've thought about using it. We'll see. Like I said, though, with a slightly short bias is what I think I would have to do, because crypto's been weak. If we are bearish, do we get a spike up first? I don't know. Again, it depends on what JP says, to be honest. I'm going to put the dollar index up here. It really depends on what JP says. And nobody knows. Again, so this conference, we could look at what the conference is. This conference is the International Symposium on Central Bank Independence. And so I don't know what kind of sentiment we're going to get from this. Generally, I think these conferences, I know the last press conference he did like this, where it was like a roundtable event, we had bullish market reactions because he said some more optimistic and favorable things. Now it's going to be a lot more nuanced than just good or bad or bad or good. You know, it's going to be, everybody's going to be reading to see what he says, and who knows. Dollar index has been moving up since the open here. There's the Dixie on the right. I use a bunch of different brokers. I use Thinkorswim, TD Ameritrade. For futures, I use Top Step with Quant Tower. Hey, thank you for the subs, guys. I appreciate it. Y'all keep hitting that sub button, guys. We are growing. Let's see if we can hit 96,000 today. Hit that sub button, guys. Again, everything we do here is free. We don't charge for content. We don't sell content. Even becoming a member, you know, I mean, you do get these coveted / majestic emojis right here. Look at that beautiful face right there, man. Wow. Look at that. Look at my dog, Rosie. I got to get one for Bruce now. Carol, you know, majestic emojis. That's the best thing you can get, you know. We don't sell anything except for emojis here. But yeah. Hit the subscribe button, hit the notification bell, guys. We appreciate it. Again, we cover all the big economic data. So, like, if you want economic data, we cover it all very quickly here. We stream CPI, PPI, jobless claims, Jerome Powell press conferences, FOMC rate hike decisions, all the big earnings reports. We cover jobless claims once a week. You know, we just cover a lot of different things. Dollar index is starting to pull back. We're at 103.40s, guys. 103.40s. SPY is popping up to 386.13s over a 5-minute period. We are green. Again, the dollar index is falling. Tesla is battling that volume weighted average price level. And if you remember, I got out of my short position because I thought that we might get dragged up a little bit from this bullish action on Tesla. And it looks like we did so far, at least. But the dollar index is looking weak over the last 4 minutes. So that's good, too. I'm not shorting Bitcoin during the meeting, no. I'm not doing anything during the meeting. I'm waiting for it to finish. Is trading worth a full-time job? My friend says it's not good, but I love it. Can you trade for a living? Sure. Will you be able to? Probably not. You know, most traders fail. I want people to really understand how difficult it is to trade. A large majority of traders will fail. A lot of people are going to spend years learning and still not turn a profit in the end. A large majority of traders lose money in short-term trading. And so if you're trying to day trade, you're almost certainly going to lose money. The ones that do make money, they lose for years and then they make money. And so putting all your eggs in that trading basket, so to speak, is usually going to be a bad idea. You should never quit your job and try to trade professionally, you know, unless you're making tens and tens of thousands of dollars a year already trading. You know, the ones that quit their job and try to trade for a living, you know, usually are going to lose money. Yeah, check out our Discord. Completely free Discord here. Completely free Discord. We've got options section here. We got options trading here. We've got signals. We've got futures trading sections here. We got daily movers that Pawn posts for, so we can see what's moving here. A lot of cool stuff. We got economic calendars. We got what Kramer's been saying, Bloomberg's been saying, Reuters been saying, Market Watch, all that good stuff. It is completely free to join. Completely free. So join the Discord. Link is in chat. Yeah, Bed Bath & Beyond earnings are out, and they lost. They missed big on it. I'm surprised they're not down more than they were. Let me see where they're at now. Yeah, so Bed Bath & Beyond earnings are out, and they are down from it, but it could be a lot worse, I think, to be honest. I either buy the SPY or the QQQ directly, not the SQ or the TQ, but the actual Q, or I just trade futures. Yeah, we're going to show Powell live. Don't worry. We're going to stream it live. We already got it ready and waiting here, so we're just sitting back waiting for it to start. Or it started already, but we're waiting for Jerome Powell to come on. I think trading is not that hard, but you need to find indicators that suit you and find your own style. Trading is incredibly difficult. The shorter the term the trading is, the harder it is. So long-term investing is fairly simple. Find low PE, large blue chip companies, buy and sit. Short-term trading is incredibly difficult, and almost everybody that does it's going to lose money. And again, this is the truth. The problem with it is that you got all these people trying to sell courses on how to do it, right? And again, the people are selling courses as a business endeavor. They're selling courses on publicly available content, like content you can 100% find on YouTube for free already, right? But they take it and they package it with really catchy marketing, and then they sell it to you for thousands of dollars. And then the problem is, like, the people that actually pay for it, the people that get tricked into buying it, they then turn into like mindless promoters of it, because with confirmation bias, it's like, look, you spend $4,000, $5,000, $6,000 on a course. It doesn't matter what's in that course. That's the greatest course I ever took. Greatest course ever. Best course ever. And so you get all these mindless people who are just confirmation bias promoting something just to justify their expense, because they're so desperate to believe in their own mind that they didn't waste money on these courses, that they're just kind of promoting it, and they turn into big shills of the courses, right? And that's really what happens. Is that they're just kind of justifying their own spending money, their own expenses in the courses. But again, a large majority of the content in those courses is publicly available for free on YouTube or anywhere else. Going back to something I said earlier, I'm not saying you can Google and find a lot of these courses for free out there already. I would never recommend you guys ever, Google some of these big courses from big names and, watch them for free on the internet. I would never recommend that, Tesla pulling back here. It's at 118.80s. Bed Bath & Beyond is at 170s. SPY is at 386.15s. Let's see if we rejected the volume weighted average price. We got about 10 minutes before the actual Jerome Powell speech happens. So we'll see what he says. If data is inflation rates are expected, we get a short, right? If he comes out saying inflation is bad and worse than expected, market's probably going to fall back down, yes. All right, guys, so we're going to go ahead and put this up. We are waiting on the Jerome Powell press conference here.
I don't think that's actually been fully established, and I think this
Let's
is
do a sound
something that,
check.
of course, we need to study very carefully.
Sound check.
But we should not forget the fact that if funding does come to the central bank in the form of retail CBDCs, there will be an asset side counterpart to that. And so if it's a case of just realigning, if you like, a kind of rejigging of that asset side portfolio over time, and it happens sufficiently slowly that it can be managed, I think that's a eminently solvable problem. I mean, central banks have solved much more difficult problems than that.
So in the interest of time, we should wrap up. I raised the question, what does it mean to be an independent central bank in the area of money and payments? The answer is quite a lot. It doesn't seem to be an option to stay passive. That is at least what I've learned. And perhaps the good idea is to stay focused on opportunities that the new technologies provide rather than stay focused and quarreling about problems. And regarding the worries that central banks might be overstretching, maybe the possible solution to this is to see this as a time in history where central banks has to take the lead. But
Sounds a
make
little
sure
low. I think that's the
promise
highest it's going to go.
Private sector that they will get out.
Yeah, I think that's the highest it's going
once
to go,
we are
guys.
in a new and hopefully better steady state. But a lot of more issues needs to be discussed before we know that roadmap. Thank you very much for us, and back to you, Marianne.
All right, guys. So Jerome Powell is going to be speaking in about 7 minutes, guys. About 7 minutes.
Thank you so much. And we will immediately proceed to the third panel. So
All right,
would
here we
like
go.
to invite you up. And
Third panel. We'll see him.
while you are
I don't think
getting
Jerome Powell's
organized,
there.
please come up to the podium. I will soon
I said,
give
let
the
me look
floor
at-
to Torsten. But while you are getting organized, let me just offer some comments. That the two panels
right.
that we have had today so far have discussed central bank independence in the light of new risks, climate, and in the light of new technology. In this panel, we will look at central bank in itself.
All right, so you can see the PDF file here. Jerome
So
Powell
what time is it?
is going to be the 4th speaker.
is it
Jerome
time?
Powell is going to be the 4th speaker.
2 minutes. Okay. All right. Torsten, we have 2 minutes actually before we start. I think we should keep to the timetable.
Is he actually there?
1 minute. Okay. Great. Okay.
What is your expectations? I honestly have no idea what we're going to get for this right here. Markets pump it up though, guys. So you guys saw us. We cut our trades on the short side because we thought this might happen. It looks like it was the right move. The speech will be about a course. Top 3. All right, guys. So we're waiting. You can hear everybody in the background. Markets pumping up ahead of this here, guys.
Let me just repeat what I just said. So in this third panel, we will be looking at. Can you hear me now? Can you
We
hear
can
me
hear
now?
you. Good.
Thank you very much. All right.
There you go.
Okay. So in this third panel, we will be looking at central bank independence in itself.
All right.
This panel will be chaired by Professor Torsten Persson from the Stockholm University. So over to you.
All right, guys. Red Book data is 5.3. All right.
Thank you,
Torsten
Marianne,
Persson,
and thanks for the opportunity to speak.
Stockholm University professor.
Stefan and I go back at least 45 years to the graduate school in Stockholm here at the late 70s, but that's another story. Now, before we get
Yeah.
to work,
At least y'all understand
let me
the
try and
reference there.
introduce the panelists, the questions we will address, and how we'll organize the session. So it's a privilege to
All right, guys.
moderate this
So-
panel because the 4 panelists really bring a great mix of academic wisdom and practical experience at the highest levels. So Claudia Buch has been a professor at different German universities. She has done research on international macroeconomics and finance. In 2014, she joined the Bundesbank, where she currently serves as the vice president. And as such, she has the main responsibility for German financial stability and attends the meetings of the ECB Council.
Markets moving
Mervyn
up.
King has done frontline research in public economics and finance. In the early 1990s, he became the chief economist of the Bank of England. In 1997, the deputy governor, and then the governor from 2003 and for 10 years. And currently he holds academic positions at NYU and the LSE.
Make sure to hit the live
Powell
button, guys.
has spent a lot of time in the private sector, first at law firms, then at investment banks. In the early 90s, he served as an undersecretary at the US Treasury.
Jerome
And Jay
Powell.
became a member of the Fed's Board of Governors in 2012 and was appointed chair of the board in 2018 and then reappointed last year.
Big
Ken
Papa.
Rogoff has an illustrious academic career that has brought him to places like Berkeley, Princeton before his current position at Harvard. His research spans a number of areas, including central bank independence and financial crises.
Make sure to hit this live
He has
button
also
to
done
make sure you're
practical
called back up on the
policy
stream, guys.
stuff.
Make sure to hit the
One
live
stint
button
at
next to
Board
the
of
play
Governors
button.
and two at the IMF, whose chief economist he was in 2001 to 2003. Next, let me state a little bit more precisely the topics for our panel. So as you know, central bank histories tend to spin around two major challenges: recurring inflationary episodes and recurring financial crises, and how to grapple with those issues. And central bank independence and the mandates are institutions that are directed at meeting those challenges. So as Beatrice reminded us in this morning, in the 1990s, there was a wave of institutional reforms in high-income economies when they adopted inflation targeting and were backed up by more legal legislated independence. So this concerns the Reserve Bank of New Zealand, Bank of Canada, the Riksbank, the Bank of England, plus ECB around the newly formed euro. And arguably, these reforms had their roots in the challenges of the 70s and 80s, high inflation spurred on by large supply shocks and sustained by high inflationary expectations. So a first question for the panel: which were the main concerns behind the 1990s wave of central bank reforms in terms of practical policy experience and perhaps also academic thinking? And how much did these concerns reflect specific challenges of the 70s and 80s or more germane issues? Then we saw a downturn of inflation, and to many that looked like a major success, tolerable losses of output and employment. So the main policy challenges in the next few decades were instead to be about financial crises, how to recuperate from the great financial crisis, and how to stave off new ones, not least at the onset of the COVID-19 pandemic. So we got to see new financial regulation, QE, unconventional central bank intervention, and policy rates at record lows for a long time. So a second question for the panel then is, which new concerns were raised by the events and challenges in the 2000s and the 2010s in
Wow, look at
handling
the
financial crisis and deflationary pressures? And in
spy up to.
particular, do these challenges suggest new trade-offs, for example, between monetary and fiscal policy, or between present macroeconomic outcomes and future financial stability? So if you look at today, superficially, the situation looks like a 70s, 80s redux with major supply shocks and emerging inflation. So this brings us, I guess, to the most important and the bottom line question. Given the concerns behind the 1990s reform and the challenges in the next few decades, should we rethink central bank independence and central bank mandates? That is, are there good ideas or even concrete proposals for new reforms of central banking rules? Okay, so finally, the plan for the session. So we'll spend the next 20 minutes on initial remarks by each panelist. Then we'll have a discussion within the panel around these initial remarks for maybe another 15 minutes. And after that, we'll turn to a round of Q&A involving the audience. So think about questions, and please think about succinct questions rather than statements beforehand, and try to relate them to the three major questions that I outlined. And in the last 5 minutes, panelists will be able to make some final remarks. Okay, so now let's go to the initial remarks, at most 5 minutes for each of you. I'm sure these remarks will span many aspects of the broad panel theme, but by agreement, each panelist will put more emphasis on one of the 3 main questions that I outlined. So Ken and Mervyn will touch on question number 1, Claudia on question number 2, and Jay on question 3. So without further ado, please, Ken Rogoff.
There he is. There's Powell right there on the right side. So we're just waiting on him to speak. There he is right there.
Well, first of all, thank you very much to the organizers, to the Riksbank, for inviting me to speak. I think you've heard so many remarks about Stefan. I can just summarize them by, in the central banking community, he is regarded as a guru, that you don't know the answer, some hard question. He's a person you really can go to and get, a very deep answer to, and we'll hear more about that as things go on. I've been asked to talk about some of the early developments, more the question 1 that we've had here. And I think the academic literature on this started in the 1980s. But of course, really it goes back among practitioners far earlier than that. But I'd say an especially important event was the Fed Treasury Accord in 1951 that set up the Fed to be an independent central bank back in the 1980s. That was a rarity still. The Bundesbank had achieved that, but most countries had not. My own contribution was to develop a theoretical model that would try to address how it would work, why it would work, and it was an answer to a very abstract question posed by Kydland and Prescott and Barrow and Gordon about why you might get stuck in high inflation and what you might want to do about it. My paper looked at various ideas, including using an inflation target, appointing people who already had a reputation for having a strong anti-inflation commitment. And needless to say, I was very inspired by the great Paul Volcker, who I was working below, very, very far below.
Spy
I was
ripping.
working below Paul Volcker at the time when I was working on that. And there's been just tremendous amount of literature since, taking this to many places. I think you're all familiar with Europe, New Zealand, the United Kingdom, but I wanted to just really emphasize an area people don't think about as much, which are emerging markets. And Tobias Adrian really spoke about this, but I still think most people don't quite understand about the efficacy of the concept, about how important it is.
Be careful,
European
guys.
emerging markets, if you looked in 1992, there were 40 countries with inflation over 40%. And that doesn't even capture things because a lot of them had hyperinflations at the time. And to get out of it, the early solution that was tried in many places for a long time was, well, the dollar's really good, or let's fix our exchange rate against the dollar. And that was very good for those of us that want to study financial crises, but on the whole didn't work so well. There was really this period of transformation where some very bold emerging market central bankers got the idea, it worked in advanced countries, let's do it here. And I think there are many, but I would single out Arminio Fraga in Brazil, Guillermo Ortiz in Mexico, for example. And I think people forget, but when they were trying this, people thought, this is ridiculous. You can't be independent in these countries with these weak institutions. And the IMF also over time really played a very positive role here in pushing the idea. By 2015, inflation was actually very low across the world. It's not today, but even in places it seemed unimaginable, not just the former Soviet republics, African countries, with inflation under 10%, even under 5%. And indeed, many people have forgotten, that central bank independence was ever needed. I invite them to read about Turkey, for example, where the president has fired central bankers the way Henry VIII changed wives, and you can see what's resulted there. I would say there are many refinements once you have an independent central bank of how to do it, and literature to which many people in this room have contributed. But I think the independence of the central bank is at the absolute central starting point to this. If you look at many of these emerging markets, they weren't really doing inflation, and they aren't really still doing inflation targeting, but they've used this as a device to establish their independence. Now, just to
Market pumping.
summarize, I would also say there are so many things I didn't expect, and I just single out one. I'm surprised the extent to which central banks in everywhere almost are regarded as honest brokers. I mean, if you want to know what the data is, you go ask the central bank. And I think that's also part of this coming from independence. I think another thing which people in this room are very familiar with, but I think it's been very important, is the community of central bankers helping to support each other, exchanging ideas. And there's been a huge networking effect in this, in providing ideas and also support. When the whole central banking community stands behind you, a little bit, your government listens. And I think we can point at many examples of that. And then, certainly recently, the central bank independence has been under attack. I certainly don't think it's an idea, which is over at all. I would actually argue that the introduction of central bank independence has been the most significant positive development in macroeconomic policy since the Second World War. Thank you.
All right, guys. So yeah, Jerome Powell is a panelist. Look, there he is on the right side. For all those saying, "Where's Powell? Where's Powell?" There he is, right there. We're waiting for him to speak. I'm not sure what order he speaks in, but he's speaking sometime soon. We'll see what happens. Let me know what you guys think.
Well,
Market's
Torsten,
pumping up.
thank you, and good afternoon, everyone. Torsten's given us 5 minutes only, so I shall reserve my stories about Stefan and the resurrection of the British banking system in 2009 to conversation over dinner. I think it is impossible to understand the movement towards central bank independence without seeing it in the context of the great inflation of the 1970s and also the stagflation of the 1980s. The former was the consequence of, I think, in large part an intellectual mistake at the time in thinking that there was a long-run trade-off between inflation and unemployment, so that tolerating a somewhat higher rate of inflation would make it possible to sustain a lower level of unemployment. But following the breakdown of Bretton Woods and the link to gold and 2 large oil price shocks, discretionary monetary policy led to rates of inflation well into double digits, and in some cases, such as the UK, above 20%. And as Ken said, in many emerging markets, even higher still. And the stagflation of the 1980s was the painful consequence of efforts to reduce inflation, which led to recessions, while inflation still remained relatively high. Now, an intellectual revolution in macroeconomics undermined the belief in this long-run trade-off between inflation and employment and helped to restore the case for price stability, which had been made over many decades before, arguably most persuasively by Maynard Keynes in his tract of monetary reform. But the attempt to achieve it after the breakdown of Bretton Woods by rigid exchange rate links collapsed in 1992 with the departure from the exchange rate mechanism in Europe of both the UK and Italy, and the end of the fixed exchange rate links in Sweden, where interest rates had been, some of us remember, hard to think of this now, raised to 500%. And the same applied to Finland. Now, politicians drew two conclusions from the unhappy experience of the 70s and 80s. First, inflation was unpopular. If exchange rates were to float, therefore, then a domestic framework was needed to ensure price stability. And that framework was the adoption of inflation targets. And second, the measures required to eliminate inflation were also deeply unpopular, with high rates of unemployment for a while. So politicians found that setting interest rates wasn't actually much fun. So why not give that power to an independent central bank with a mandate set by Parliament? And those two conclusions led governments around the world to give greater independence to their central banks. And in most cases, this did go hand in hand with an inflation target. Now, the policy debates at the time in the 1990s are, I think, helpful in understanding the challenges to monetary policy today. But there are three important differences between then and now. First, in the 1990s, the memory of the great inflation of the 1970s was still vivid. Today, there is almost no one below retirement age who remembers the peak inflation of almost 50 years ago. And until recently, low inflation had come to be taken for granted, both by economists who mistakenly assumed that inflation in the medium term was determined by the inflation target, and by the public who had stopped thinking and talking about inflation. So the constituency for low inflation, so widespread in the 1990s, has been somewhat eroded. Secondly, in the 1990s, the popular support.
Chat real quick. Do you guys want me to only stream Jerome Powell, or do you want to listen to this guy as well? Let me know.
And to support them when it was necessary to raise interest rates. I think today governments can see only too clearly the challenge of issuing substantial quantities of government debt when interest rates are rising and central banks are no longer buying their debt. So external pressures on central banks are, I think, much greater now than in the simpler days of the 1990s. And third, when they were introduced, and I think this is in some ways the most important point, inflation targets were not seen as a theory of inflation. But today, in the models currently fashionable in academia and used by central banks, the inflation target is the variable that closes the model and determines the path of inflation in the medium term. But the original aim of inflation targets was actually to focus and change the way decisions on monetary policy were made. That is why inflation targets were accompanied by measures to increase the transparency and accountability of decisions and decision makers, respectively. Clear explanations of the reasons for decisions on interest rates were to be set out not as a matter of mystique by central bankers mumbling and saying very little. They were set out clearly in speeches, evidence to parliaments, and reports such as the Bank of England's inflation report. And although these innovations remain, I worry that model builders have tried to use the inflation target as a theory of what drives inflation. Because as a result, any deviation of inflation from target is assumed to be transitory, and policy mistakes followed. So I conclude really that an analysis of why many central banks were granted independence in the 1990s, along with the adoption of inflation targets, is clearly relevant to understanding today's challenges. Thank you.
Also, guys, so we do have a transcript of the actual speech from Jerome Powell right here. So it looks like they put out a transcript. He hasn't actually done it yet, but here's the transcript of it.
Thank you very much. to
right
the
here.
organizers.
So if you
And
want to
I
see it, I'll
was
put it up in chat.
very honored to be invited here to speak on this panel on the occasion of the farewell of Stefan Ingves. For me, when I joined the ESRB, the European Systemic Risk Board, he was one of the founding fathers. He was already there, and I actually learned a lot from him in terms of the relevance of financial stability for monetary policy, the importance to need to act when it's needed, and the importance of clarity in communication. And I'm saying this not to break the rules, because actually rules are important, and that's going to be one of my main points here. But I'm saying this because I think this is all crucially important at the current juncture. As we've just heard, I think in some sense, central banks have enjoyed a capital of inattention or rational inattention to risks to price and financial stability. We've lived in a period of very low inflation and moderated risks to financial stability. So the public didn't actually pay much attention to central banks' core mandates. But current macroeconomic developments, not just cyclical, but also structural, really challenge price and financial stability. So explaining central bank independence and acting accordingly has become more difficult and also more important. Central bank independence is certainly protected by institutional safeguards. We've just heard that. And that actually includes fiscal and macroprudential policy frameworks. But I think we also need to be very accountable. We need clear communication to sustain public support to independence. So let me explain these points quickly. Obviously, as been mentioned, inflation and risks to financial stability have been low, so the public in some sense could safely delegate the task of price and financial stability to technocrats and central banks and pay relatively limited attention to the details. Now, this has changed. That's my second point. So we have, first of all, inflation, which is well above targets of central banks today, and it's one of the main concerns of the general public. I looked at the most recent Euro barometer poll, and there 42% of the respondents, and I think that's actually on the low side, cite rising prices as the most important concern, and actually that ranks above issues like energy supply and the international situation. And I would argue that actually concern about high levels of prices and perceived inflation is going to remain even if and when inflation rates recede. So that's the first challenge. The second challenge is that during periods of low interest rates, vulnerabilities in the financial system have built up. In Germany, to give an example, we've had 2 decades of declining corporate insolvencies, very low credit risk, strong support to the real economy and indirectly also to the financial system through fiscal and monetary policy. And that, we think, leads to an underestimation of macroeconomic risk going forward, and also the expectation of further policy support. So higher vulnerabilities in the financial system is the second vulnerability. The third, we have high levels of debt, and that creates tensions between fiscal and monetary policy. And that's my third point. It's important, but also more difficult to actually explain the role of central bank independence and to act accordingly. So one tension, one conflict of interest that can arise in the short term is that there can be pressure on central banks to keep interest rates too long for longer to avoid risks to financial stability. But I think this even increases vulnerabilities in the financial system. So if we delay the necessary monetary adjustment, that can lead to the buildup of further vulnerabilities. And I think if we look back to the global financial crisis, we have seen how monetary policy can actually come or be at risk to come under fiscal or financial dominance. So at the time of the crisis, central banks provided liquidity to stressed financial institutions, and often to institutions with potential solvency problems. Capital buffers in the financial sector were insufficient, and fiscal funds were ultimately needed to cover losses. What are the lessons from this episode? Well, we need sufficient capital buffers in the private sector. Gaps in the institutional framework needed to be closed, so resolution frameworks have been certainly high on the agenda. And independence and credibility profitability of central bank also may come under threat if there are insufficient fiscal backstops. Now, a lot has happened in the meantime. We have better fiscal and macroprudential frameworks, and that help us to prevent financial or fiscal or financial dominance. And these frameworks are actually complementary to the frameworks for central bank independence that we've just heard about. Obviously, there's a lot of institutional safeguards to central bank independence. In Europe, primary law assigns a strong role to central bank independence, and the legal basis in the euro system is even stronger than in Germany. So changing the treaty would require unanimity versus simple majority when it comes to changing the Bundesbank law in Germany. Maybe just as an interesting side remark, there's interesting historical research showing how independence was made into the legislation in Germany, and when independence was discussed in the 40s and 50s, there was actually stronger
All right, she's
support
supposed to
for
have a
independence
5-minute time
by the
limit.
U.S. authorities than by the German authorities. Obviously, it's different when it comes to financial stability. The frameworks, the macroprudential frameworks that we have to consider that the time horizon for financial stability risks is different than for monetary policy. Financial cycles last longer than business cycles. The policy objectives are different. It's more difficult even to quantify financial stability than this is the case for price stability. And we have different types of instruments. But still, we need also independence for financial stability policies, as we've also heard from Tobias, to avoid inaction bias and to avoid that authorities come under fiscal pressure. And the last point I would like to make is also something that colleagues have mentioned. Legal frameworks are not sufficient. We have to communicate and to explain independence. And this can actually be quite a balancing act. So we have on the one hand the technical experts to which we have to explain our policy cycle, where we evaluate our policies, the intended and unintended consequence of policy choices. But these policy evaluations are rather technical and tuned to an expert audience. But at the same time, we need to convince the general public that the central bank acts in its best interest and protects the public good stability. So we need a translation from the language spoken by the technocrats to the language spoken by the general public, but we don't have established dictionaries for that. So one tool that the Bundesbank is using is actually a small video. It's like a comic strip explaining why financial stability is not boring. And if you get the chance, take a look at it and give us feedback.
All right.
And so I think we need this dialogue with the public in particular, because we live in a time of structural change and we need to understand what's going on around us. And so we need a lot of communication channels also to the general public. Thank you very much.
All right, guys. So let's see when Jerome Powell is going to speak here. He's supposed to be speaking sometime soon. There he is. Here he is, guys.
It's an honor to be here
There he
today.
is.
I guess I'd like to start by thanking you, Stefan, for your friendship, for being a great colleague. You are an absolutely essential person in our world, and you'll be badly missed. I'm going to use my comments focusing on the U.S. context, and I'll address three main points. First, the Federal Reserve's monetary policy independence is an important and broadly supported institutional arrangement that has served the American public well. Second, the Fed must continuously earn that independence by using our tools to achieve our assigned goals of maximum employment and price stability, and by providing transparency to facilitate understanding and effective oversight by the public and their elected representatives in Congress. Third, we should stick to our knitting and not wander off to pursue perceived social benefits that are not tightly linked to our statutory goals and authorities. So starting with the first point, as Ken and others have pointed out, on the first point, the case for monetary policy independence lies in the benefits of insulating monetary policy decisions from short-term political considerations. Price stability is the bedrock of a healthy economy and provides the public with immeasurable benefits over time. But restoring price stability when inflation is high can require measures that are not popular in the short term as we raise interest rates to slow the economy. The absence of direct political control over our decisions allows us to take these necessary measures without considering short-term political factors. And I believe that the benefits of independent monetary policy in the United States and more broadly around the world are well understood and broadly accepted. However, in a well-functioning democracy, important public policy decisions should be made in almost all cases by the elected branches of government. Grants of independence to agencies like ours should be exceedingly rare, explicit, tightly circumscribed, and limited to those issues that clearly warrant protection from short-term political considerations. With independence comes the responsibility to provide the transparency that enables effective oversight, in our case by Congress, which in turn supports the Fed's democratic legitimacy. And at the Fed, we treat this as an active, not a passive responsibility. Over the past several decades, we've steadily broadened our efforts to provide meaningful transparency about the basis for and the consequences of the decisions that we make in service to the American people.
2 minutes till the market
We are
opens.
tightly focused on achieving our statutory mandate and on providing useful and appropriate transparency. On the third point, it is essential that we stick to our statutory goals and authorities and that we resist the temptation to broaden our scope to address other important social issues of the day. Taking on new goals, however worthy, without a clear statutory mandate would undermine the case for our independence. In the area of bank regulation, as Tobias mentioned, the Fed has a degree of independence, as do the other federal bank regulators. Independence in this area helps ensure that the public can be confident that our supervisory decisions are not influenced by political considerations. And today, some analysts ask whether incorporating into bank supervision the perceived risks associated with climate change is appropriate, wise, and consistent with our existing mandates. Addressing climate change seems likely to require policies that would have significant distributional and other effects on companies, on industries, on regions, and on nations. Decisions about policies to directly address climate change should be made by the elected branches of government and thus reflect the public's will as expressed through elections. At the same time, in my view, the Fed does have a narrow but important responsibilities regarding climate-related financial risks. These responsibilities are tightly linked to our responsibilities for bank supervision. The public reasonably expects supervisors to require that banks understand and can appropriately manage their material risks, including the financial risks of climate change. But without explicit legislation, it would be inappropriate for us to use our monetary policy or supervisory tools, for example, to promote a greener economy or to achieve other climate-based goals. We are not, and we will not be, a climate policy maker. Thank you.
All right, so there's him for now. Let's see about a Q&A.
Thank you all four for these.
All right, there's the market open on the left here. You can see the S&P 500.
Now you'll have a chance to agree or disagree with anything the other panelists just said, or you can also get into one of our main questions that you
market's popping up.
Initial remarks, especially if you have views on desirable reforms of central bank independence.
SPY pump it up to 387, 388. So yeah, I'm going to mute this for now, guys, and we're going to come back to it. I'm going to wait for the Q&A section to start. I think if we do move markets, I think the Q&A section is going to be the most influential over markets by far. That's where the audience is going to give a chance to ask them questions. And so I'm not shouting, guys. Why do people keep saying, am I yelling? Does it sound like I'm yelling? Maybe relative to this, if you got it turned up all the way, maybe. But, you know, we're just normal volume. Is my mic really loud? Here. My bad, guys. I'll turn it down. Let me know if that's better. Yeah, it's the video volume. Yeah, I'm not yelling. Markets pump it up, though. Look at the SPY at 3,900. Y'all hit the subscribe button as well, guys. We certainly appreciate it. Again, we're going to leave this up, but we're going to wait for the Q&A section to start. And so I'm going to kind of keep track of that. to see if the Q&A section starts, and then we'll put that up. But the market is ripping up here. Also, guys, y'all check out our sponsors. One of our sponsors is Top Step. What they do is they give you a demo. If you want to trade these economic releases, like we got CPI later this week, we got wholesale inventories today. If you want to change it, if you want to trade this stuff, you can trade it through a funded account program in futures. We're sponsored by Top Step. I'm certainly biased in Top Step's favor, but what they do is they give you a demo. If you can hit the target on their demo while following their rules and pass both phases, then they fund you the same amount. The base one's $50K. If you can hit $3K in profit on that $50K demo without losing over $2,000 total or $1,000 a day, then they fund you 50 grand with a 90% split. I think a lot of people are not going to be able to get funded because most traders lose, but it's just a great way to test your skill, to see if you're ready to scale up. It's less than $150 a month. And again, it's a great way to test yourself as a trader. Although, again, I'm certainly biased in their favor because they're a sponsor of mine. And so here's the link if you want to check it out. We are going to start trading the open. The SPY is pushing up really big. We're over 388s on the SPY. Tesla is up to 122.50s here. So Tesla is really moving. And again, we'll pin this to the top of the page if you want to check out Top Step. But yeah, we're going to get ready to trade some. And we're going to wait for the Q&A. I'm hoping the Q&A will move markets a little bit more. Yeah, I don't think there's any way for me to turn down my mic. I mean, I think my mic's just normal levels here, guys. So I think you got to turn down yours if you think I'm yelling. Maybe I'm wrong, though. Chat, let me know. All right, guys, so we're going to see if we get a little pullback here to buy into. The market has pumped up pretty big at the opening bell here. Again, what happened was that Jerome Powell released – here, we're going to take one contract of the regular E-mini here. What happened is Jerome Powell released the transcript to the speech early. There we go. Starting to pop up. All right, so we just made a little bit there, just a little gain. I'm not sure how much we made. Let's check. But we just made a little bit on that pop. We made about $65 here, $62 here. There's the trades today. We will put that smaller, 62.50, and then we'll put our positions up here as well. And again, let me know if you guys want me to. I can unmute this and we can listen to it while I'm trading.
I think that was very interesting what you said. Like in the 90s, there was still the memory of higher inflation. And I also alluded to the discussion of the situation in Germany in the 50s, where actually the politicians seemed to be tempted, when you read the account of the historians, to have a little bit less independent central banks. But the public was still so much aware of the.
All right, so the SPY has had 1, 2, 3, 4, 5 green candles in a row here. And again, if you haven't already, hit the subscribe button. Yeah, anybody complaining, like I said, all we said was that it was a Jerome Powell speech, which it was. Now, everybody watches speeches, and this wasn't just reported by me. This was reported by Bloomberg, by Reuters, by MarketWatch. So everybody was watching the speech. It's not like y'all getting mad at me because he didn't say what he wanted to say or because it didn't move the market like y'all wanted it to move. It's just completely unrealistic. We'll cover it. There he is. Let's see what he says.
Pandemic and the responses to them. Does it suggest that there are problems with the mandate, unforeseen tensions between either financial stability and monetary policy and that sort of thing? And I guess I would take the position that would not be my takeaway at all. I think what happened in both crises is that central bankers used their tools pretty innovatively to deal with exceptionally unforeseen and difficult circumstances. I think the main takeaway from the global financial crisis was the need to build far more resilient core of the financial system. And we did that. The banks did that. We did that. All over the world, people did that. And I think that financial system now is now substantially more resilient and more strong at its core. I think it held up better in the pandemic as a result. The pandemic was a different thing. It was it called for a whole of government response from a medical standpoint, and it called for use of fiscal policy and monetary policy tools in unprecedented ways. There had been a concern in the United States that Dodd-Frank had too limited the Fed's authority under Section 13.3 to do facilities and lending. The new system actually worked quite well. What it did was it required the Treasury's, the elected part of the government's approval for these emergency lending facilities. And that actually worked very well. And that's actually an appropriate thing because these are extraordinary measures. We only have the authority during emergencies. And to have the elected government approving it, it was a very constructive process between us and Treasury. So I guess to take a step back, I think that the tools that we have work. I think there's nothing wrong with our mandates. I don't see anything about the laws that govern us or provide our mandates that needs to be changed, and it seems to have worked pretty well in these two very difficult circumstances.
All right, market's pulling back now.
Yet there is somehow, at least to some of us, a difference in the reaction in the 90s and the reactions now. So in the 90s, the public enemy number one had been inflation, as Mervyn and Ken had
Market's
discussed.
dipping down here. Let's see if we can buy some.
That was an outcome of decision making that wasn't useful and was subject to these credibility problems. And what we tried to do then was to construct a more robust framework in terms of institutional reform that would produce better decisions, that would keep
getting a little bit of a rebound in markets.
Now the public enemy number one, arguably over the next 25, 30 years were these repeated financial crises or risks of financial crisis. And it's true that there was, of course, much more regulation of the financial sector, but not to the same extent, trying to address by institutional measures the underlying decisions in this arena. By banks, yes, but not necessarily by policymakers. So is there a case, Mervyn, you have strong thoughts on who should be responsible for financial stability and macroprudential policies? Do the events that we went through during that dramatic era of the great financial crisis made you rethink those issues?
Well, I think the answer is yes, because when the Bank of England was made independent in 1997, actually both the then governor, Eddie George, and myself were quite content, despite some press speculation to the contrary, that bank regulation would go to a separate body. But the reason was that at that point, supervision of banks was really all about depositor protection. It was about elimination of insider trading, fraud, etc. It wasn't about a historical bank run. And
lost about $90 there.
Inadequate prudential regulation.
Market pulled back fast.
And in the 5 years before the financial crisis, that's when you saw the leverage of the banking system increase very rapidly, so that it did become very fragile. And I think after that, I was very struck that when the to-be Prime Minister David Cameron and George Osborne, the Chancellor, came to see me, their argument for putting regulation back in the Bank of England was essentially that the only institution that people will trust is the central bank. Therefore, you need to take some of this back. Now, you can argue, I think, whether some of the details of regulation needs to be inside or outside the central bank. That's a less important thing. But the principles of ensuring, as Jay said, that the banking system was sound, I think are ones that central banks have to be involved in. But deep down, it seems to me the big difference between the way policy was set in certainly the 80s and early 90s and today is this business of recognizing that the quid pro quo of central bank independence is communication, explanation, and clarity of that communication. The great American economist Bob Solow once said that an economist needs three qualities: faith, hope, and clarity. And the greatest of these is clarity.
Tesla pulling down might drag the market down.
Can I just say something in response to your comment? I mean, inflation's back. So yes, if you'd asked that question in 2021, maybe, people said, well, financial crises, but I think you need a framework that, as Jay was saying, is stable over the full cycle of things that are happening and doesn't get, it gets tuned, but and also let's look at the rest of the world, please. I think if we're looking at developing economies, emerging markets, which are
Markets
also
turning.
struggling to find frameworks, that I wouldn't tell the IMF to change what it's doing in terms of central bank independence.
All right. So maybe we'll go to the section when the public is involved.
All right, here's the Q&A, guys.
session.
This is the. I think this will be one of the more relevant parts of it. So
if
here's
you want
the
to
Q&A.
say something, please raise your hand.
Right, we got 6
to pose
contracts.
a question. If you do get the mic,
I might
please
cut my trades
start
ahead
by
of this
saying your
though,
name. Please be succinct, and please try to relate to the overall theme of the of the panel. Okay, Richard Portes, please.
Yeah, we're coming through. Richard Portes, London Business School and European Systemic Risk Board, where I have learned over several years a great deal from Stefan English. No more of that now, but maybe later. I'm not totally convinced that we now have a resilient system. Mark Carney said that in 2017 as his final statement from the Financial Stability Board. But then the banks, yes, but we found in early 2020 that that wasn't true of the non-banks, in particular the money market funds, and the central banks had to step in. Central banks don't like to do that, quite rightly. They don't like to have to act as market makers of last resort. And that may be a compromise of the mandate. So the questions that I would put to the panel, as we've seen, we've seen very recently, the rise in nominal rates is exposing financial fragilities in the system. They came from the search for yield, whatever you want to call it. And we saw an extreme example of that in the United Kingdom in September of this past year. Now, in those circumstances, should financial stability be explicitly in the mandate? Should we be recognizing reality, what central banks actually do in practice? Would that help avoid financial dominance if it were in the mandate? Given the huge costs of financial crises, is financial dominance in a sense inevitable? Recognize reality and put financial stability in the mandate. Why not?
Wants to take a stab on that?
I mean, in a sense, it is in the mandate, most central banks now. And I think it needs to be linked explicitly to the instruments of central banks. This was the problem before. And the obvious instrument is whether you call it lender of last resort to banks or the equivalent to the non-bank sector. And I think that the central banking community is very focused on the question of defining the circumstances and the nature of institutions that happen to be non-banks that would merit an intervention. And I think that the only way to handle this is to have a framework which is set out ex ante, which actually tries to identify clearly the circumstances and the institutions that would merit lending from the central bank, but also ensures that the scale of that intervention is also under the control of the central bank and not something which the actors themselves in the financial system can expand to almost any number simply by the actions that they take. It's ensuring that there is enough collateral against which to lend by the central bank. Now, I think the central banking community is well aware of these problems. It doesn't make them easy. It doesn't mean that you can do it in a week. But my guess is, yes, you're right, Richard, that there will be an expansion of the mandate and that it's there in principle, but it needs to be made much more concrete by saying, what are the institutions, what are the circumstances, whether it's maturity mismatch or something else that would justify an intervention, and to have sufficient regulation on that degree of maturity mismatch ex ante to limit the size of the intervention.
Claudia.
Yeah, no, I agree that to some extent the framework for central banks to be involved in macroprudential policy is well defined. So the Bundesbank, according to the German financial stability law, has a clear mandate in that regard. It's a joint mandate with the supervisory authority and with the Ministry of Finance, because as we all know, there's a lot of distributional implications that macroprudential policy decisions can have. So it's not us alone. And I think also the ECB has clarified in its strategy review how monetary policy and financial stability interact. The one point that I would like to make in addition is that we also do have frameworks for evaluation of policies and whether we've done enough. So the FSB, the Financial Stability Board, started this big project in 2017 and looked at the reforms that have been implemented, found no major side
Weakness
effects,
coming in,
found
guys.
that
Market's
a
turning.
lot has been achieved, but there's still also gaps when it comes to resolution reform. So I think also for the areas that you mentioned, the non-bank financial intermediation space, we clearly have to implement policies and look at the resilience in that part. So I fully agree. We can never say that the job is done and we can all lay back. That's what we're there for.
Jay, please.
Just to add, in the same spirit,
Jerome
I think
Powell.
what the pandemic revealed was weaknesses in the non-bank financial sector, much as the global financial crisis revealed those weaknesses in the big banks and the large utilities, financial market utilities. And so there has been, as Claudia was saying, and Mervyn was saying, there's a lot of effort going into, and has been, in what do you do about money market funds? What do you do about the treasury market? These things are much, and I think the first order answers need to be changes to the structure of these institutions to make them stronger, more resilient on their own. I would say expanding the provision of central bank liquidity is not the desired response. It really is to strengthen these institutions. Our capital markets are quite vibrant and very different in what they do from what the banks do. And I wouldn't want to see the kind of prudential regulation that goes along with liquidity provision. I don't think it wouldn't be great to extend that too much into the non-bank financial sector. I'd rather work on structural reforms, which is kind of what we've been doing.
Klaus Eklund.
Thank you.
Market's choppy. We're going to see if we reject at the previous closing price right here, but we're kind of going back and forth today. Green, red, green.
Stefan. I can add that I actually made undergraduate studies together with Stefan, so I'm even older. But a question of independence. It seems that you have mainly been discussing central bank independence from, let's call it, political pressure. And of course, partisan pressure would be even worse. But there's something more subtle about the independence issue, which I think we can discuss in Sweden right now. I'm personally interested in that. I worked in the finance ministry many years ago, but I was also on the general board of the Riksbank, Riksbanksfullmäktige, not the board of directors, but the general board before, in the old evil days before independence. Anyway, in Sweden, we have 4 institutions: the Riksbank, the Financial Supervisory Authority, the Debt Office, and of course, the Ministry of Finance. And they often work with similar issues, obviously. And they often have to cooperate. So the question here is, how independent can the central bank be in reality? To what extent must the central bank
have to cut it. Market's going down and up and down and up.
Lean against the wind or with the wind, and be politically agile at the same time as it is formally independent? Maybe it sounds like a stupid question, but I think actually this is almost as important as the, let's call it, the big issue of political independence. I'd like to hear sort of your experiences from this. How independent can the central bank really be?
Well, can I start by saying, I think we have to distinguish between monetary policy independence, where the case, I think, is very strong, from all the other activities of the central bank. So as a regulator, the United States Fed's very powerful, but there are many other regulators it deals with. And I think the same is true in most countries. So that it's very different conceptually. And I think all regulators, we'd like to be independent from over political influence and being bought off, or, even if it's only psychically held hostage by those that it regulates. But I think that's, the central bank in general, and looking at all its functions, it clearly has to coordinate with other agencies. It clearly has to be subordinate to political policy as we had in the first session here.
So I can speak from my experience, which was that between 1997, when the Bank of England was made independent, and 2013, when I left, there wasn't a single episode where the elected politicians put pressure on the bank to adopt one interest rate policy or change rather than any other. Whereas, as Jay talked about, the facilities that were put in place in the US under the new regime, which was meant in some sense to give more control to elected politicians, we in the Bank of England in 2010 really introduced a compact between the Treasury and the Chancellor on the one hand and the Bank of England on the other, which said that any lender of last resort operation had to be approved by the Treasury. That seems to me perfectly reasonable and appropriate. And you have a private conversation where you explain why you want to do it. And in very few cases could I imagine that the Treasury would say, if the central bank feels that a lender of last resort operation is appropriate to prevent some collapse, the idea that the Treasury is going to say you can't do it, I think is not likely to be true. But since taxpayers' money is at risk, it's perfectly reasonable for the Treasury to have an input on it. There was never any conflict between these two different approaches in the different areas of policy. So I think the important thing is for it to be quite clear what that policy responsibility is, whether it's in the US with changes in legislation or the compact agreed between the bank and the Treasury in the UK. It's quite clear what the lines of responsibility are and who has to be consulted. That's the important thing. That's what prevents, I think, things going very wrong. It's where it's where different institutions or players all feel that they are the people responsible for a particular policy that you get difficulties.
Yeah, well, to express it differently and perhaps more simply, it's a big difference between taking the decision in deliberation with others or taking it after deliberation with others.
Yeah, here's my profit graph
responsibility
over the last 4 or 5 days, guys. So, I mean,
Yeah.
people could say, hey, it doesn't work or hey, whatever, but like, pretty nice graph here. We'll take it,
Let me put it like this. I think it was already said by Ken Rockoff. I think inflation is back now. We are more or less, in my interpretation, still in the midst of a storm, and this storm is not over. So we have to do our job, our main mandate. This is our role. During the last 10, 12 years, we were the most welcome partners of the politicians because we, in our independent role, we did everything to fought against all the financial crisis and did what we did. But this came with a price. And now in the next years, the politicians have to learn that monetary policy is coming with a price. So maybe some of us, they have to announce that there are maybe losses or not the profits we came up in the past. What is your opinion about that? Is that influencing the way we are being perceived in the future about our independency?
Who wants to take that on?
Well,
market's bouncing back green on the day now.
Something that I said, which is that the pressures from politicians will be greater and more complex today than they were in the 1990s. And you're absolutely right. But I don't think it's an issue about the mandate of the central bank. That is unchanged. It's that some people in positions of political responsibility will learn that life can be difficult. But I don't really see that there is a great wish anywhere to change the formal independence of central banks. But politicians will always want other people to do things that would benefit their own short-run interests. That's where central banks will remain solid and maintain their independence in respect of monetary policy. And they have every incentive to do so, in my view.
Someone else? No?
Well, I'll add briefly. I mean, clearly, there are many cases where, given the central bank's independence, politicians will look to the central bank, as Mervyn's saying, to do something they should do, but they don't want to do, or political interests will want something to do with inequality or something to do with the environment that they're not getting through the political system, and they'll view the central bank perhaps as an end around being able to implement it. But of course, at the end of the day, the central bank can't take political decisions consistently and maintain its independence. They're deep crises where the central bank just has to act. But I think in that case, it again is looking to the political system to back it up. If you go to developing economies, the normal rhythm of things is the central bank moves, but then the Treasury kind of takes over everything it did, and everybody knows that that's coming, and so it works that way because the central bank can move so quickly. But it needs to be very wary of taking political decisions.
Stefan.
Outside the topic of the panel, but since Ken, you are on the panel, I'll ask you anyway. You wrote a nice little book called The Curse of Cash. And in this environment, cash is disappearing. So what's your advice?
Well, isn't it wonderful that the people who organized this event had a panel just before us about this? But no, I think one of the things that's been very naive about I will call them crypto evangelists, is that they can somehow do something better and have an end around. And in fact, if you look at the history of money, which is probably what I should have called my book, and you look at the private sector always invents everything, but for many reasons, the governments eventually regulate it and even sometimes appropriate it. And I think, that's what we're seeing going forward in the digital space. You need rules of the road. And I was going to bring it up earlier, but I have to mention FTX. That was kind of a success for the regulatory community. It didn't do anything. It's the $32 billion at the heart of the crypto system just had no effect. And I think it shows how you need some regulatory structure to provide guardrails, and the central banks need to do that. But anyway, I've learned from you over the years on this issue, so thank you for asking that question.
Well, since we're spiraling out of control here with questions about anything, we should try to wrap up. So all good things must come to an end, and I'm not going to try to summarize what has been said, but I'd like to end with some final remarks. But really just 1 minute for each of you to summarize for the audience, which is the most important thing that we should take away from the panel, if you had to.
All right, the most important thing for the panel.
Which would that be? Who wants to take that first? Jay?
So I'll just conclude by saying that for us, central bank independence is a matter of statute. It's not in our Constitution. It's just an institutional arrangement that has served the public well, nothing more, nothing less. And as long as it does serve the public well over time, then I think it's safe, and I think it's safe now. But that means we've got to be committed to achieving our goals and to sticking to this precious grant of independence. To keep it, we need to deserve it, and that means stick to that work and don't look for broader things. Where it was discussed at the first panel, really, we shouldn't be getting ahead of where the public is if there's no specific mandate. And in the case of the U.S., that's a particularly salient point today.
All right, guys. So that is it for the Jerome Powell press conference. Like I said, guys, we have been trading back and forth. I haven't really said much because we wanted to let the panel finish here. But listen, we're a scalper, but we don't just scalp. The way y'all see me trading right now, it's just kind of attacking small little moves with relatively small amounts of money. It doesn't matter how I'm trading right now. We day trade, we swing trade, we invest here, we scalp here, which is really quick short-term trading. So we do a little bit of everything. We have been wildly successful with our swing trades lately. And again, I just want to put this into perspective. Those who are just kind of sit in the comment section waiting to critique other traders are usually the ones who lose the most out of anybody, because profitable traders just don't act like that. Profitable traders don't sit in the comment insulting other traders. Generally, those are people who have like a deep-rooted insecurity about their own trading, and so they are the most vocal in terms of criticism towards others. The reality of it is we don't claim to be an expert. We don't charge for anything. We don't sell a course. We don't sell a service. Like everything we put out there is free. I don't even claim to be a good trader, so none of that matters. We got thousands of people that show up for these live streams because we cover all the major economic stuff that happens here. So listen, if you appreciate that, hit the subscribe button. I certainly appreciate you all. We are green on the day as well. And again, if you want to see my graph here, yeah, we're kind of break even today. Yesterday, we made money doing exactly what we're doing now. The day before yesterday, on Monday or Friday, we made a bunch of money too. Here's Friday's trade. So we're doing pretty well. But regardless, like it doesn't matter. We don't claim to be experts or anything like that. So hit the subscribe button, hit the notification bell. We appreciate you all. And yeah, remember, we got CPI this week on Thursday, and we will cover this data as soon as it comes out. So again, thousands of people show up for these streams because we cover the data as soon as it drops. And so if you want the CPI data quickly, subscribe to the Beginner Trading Stream. We appreciate you all. Hit the like button, hit the notification bell. Thank you guys so much. And yeah, let's keep the growth up. We had so many subscribers today, guys. Amazing growth. And we're going to keep trading here, guys. So if you want to stick around and chill with us and watch us trade, we're going to stick around and trade today. Really, we're just getting started. It's still pretty early. You know, the opening bell can be volatile and random. That's why you see me kind of trading really small, not taking any huge risks. None of the stuff I got into was big risks relative to what I normally do. So we're just trading small here. And yeah, we're just kind of sitting back. I probably cut this. We got a big downwick pressure. So yeah, we barely got out of that before the huge drop. But yeah, like I said, here's my graph since Friday. We do have sponsors though, and again, one of our sponsors is Top Step. Top Step, if you want to trade this is we're trading on a platform called Top Step anyway. And so like my Thinkorswim account's got about 150 grand in buying power. It's about a $40,000 account. This is what's called Top Step. It's a combine account, so it's a challenge account. And so what they do, and this is the best way to test yourself as a trader, they give you a demo. If you can hit the targets on their demo while following their rules and passing their phases, then they fund you the same amount. So the base one's 50K, the top one's 150K. If you could pass their testing, they fund you 50 grand with a 90% split. Most people are not going to be able to get funded because most traders lose money. But regardless of that, it builds you into a better trader, and it's an amazing test of your skill, and it's less than 150 bucks a month. And so if you want to test to see how good you are, you can take these challenges. If you lose, it's not the end of the world. You're down less than 140 bucks. But if you actually get funded, you get a 90% split. You make 20K on that funded account, you keep 19K. They keep 2K since they're funding you that money. Again, you can find the link to that in the description. We really appreciate it. Thank you guys. We're just going to hang out. Yeah, maybe a little bit uneventful, but again, we're going to cover it regardless just because that's kind of what we do here. So we're going to stream it regardless, hoping we get some fun action from it. But if not, you know, it happens. It's not the first one. One thing that we know will move markets is the CPI on Thursday. Thursday's CPI session will certainly move markets, and we are going to stream it as soon as it comes out like we always do. So, hey, hit that subscribe button. And yeah, let's keep the growth up. We are green on the day slightly here, or maybe not green anymore after that last turnaround here. We're going to take some size into this position. There's 3 contracts. And a nice little pop up here. Maybe we should have taken profit there. Okay, that's a little bit better. We have 3 contracts. I want to give it time to run up more. I think it probably is going to, but maybe not. All right, there's 5 contracts here. So I really like this size. Let's see if we get a run up. Nice little pop towards the highs. Consolidating back and forth here. So kind of a neutral trade now. Slightly green. There we go. All right, so we just took a little bit off. Wait, what? It didn't profit me at all on that trade? How? How in the world did I not make any profit there? Bad feels, I guess. All right, so there's a turnaround. 4 contracts. There we go. All right, there we go. We locked in $30 there. We'll take it a little bit more off. I just made about $50 on that trade. Again, that makes us green on the day today. Very slightly green. It's been a back and forth day, but green nonetheless. If you want to see something that we usually do is this is the S&P 500. The big benefit of futures, and a lot of people don't realize this, is that there's no PDT rule in futures. So you can day trade, you can short in futures without PDT restriction. And that's a huge edge. A lot of people are forced to day trade penny stocks. Just be careful today, guys. The market is really sideways, really neutral. Yeah, appreciate all the kind words, man. With so many trolls in chat, like these big streams, man. We actually broke our stream record, so we had over 7,000 people here. So we broke our stream record here with this stream. So thank you guys so much. That's amazing here. Again, we did break 30. We broke 96K subscribers today too. So man, so it was an eventful stream for the channel, even if nothing really happened. This platform is called Top Step. You can find the link in the description if you're interested in it. But man, market is still starting to come up. It's been mostly choppy. For whatever reason, Quant Tower's been giving me trouble today. Anytime I want to look at like what's going on, it gives me this 1 minute chart, which I really don't want. I guess I'm gonna have to use a 5 minute chart. And again, remember guys, I've got 4 monitors. And so I'm usually looking at charts on the other screen. I'm not just trading. I'm not scalping off a 5 minute chart. I guess that's the best way to put it. Oh yeah. Y'all want some music? Okay, here, I got you. Hold on. Thank you, Tiny. Yeah, hey, we're gonna hit 100K pretty soon. Yeah, for sure, Brian. Thank you, brother. Yeah, man. Again, like my big thing is like we have sponsors. Like Top Step's a sponsor of mine. I'm definitely biased in their favor. Chart Prime is a sponsor of mine. I'm definitely biased in their favor. But like Top Step and Chart Prime are just really dope companies, man. And again, we don't charge. There's no paywalls behind our content. Is the best way to put it. Like you don't have to pay to see our content. It's all free. Like, I don't want to be a guru. I don't even claim to be a good trader. Like, we just try to put everything out there for free. We don't claim to be an expert. I don't want to act like an expert. I just want to teach. I want to tell people the truth about trading. Most traders lose money. Most day traders especially lose money. A large majority of them fail. Penny stock investing is you're almost guaranteed to lose money investing in penny stocks. And, just take it small, trade very small. The best edge you can have in trading in the beginning, if you're just now getting started for a lot of you at home, is to long-term invest. Long-term investing is the easiest form of money in the market. It's the easiest profit in the market. Warren Buffett's value investing, which is diversifying into blue chip healthy companies, buying and sitting for 5 to 10 years is the most effective way of trading in the world. You're almost guaranteed to make money if you diversify well enough into blue chips and hold. And a lot of people get wrapped up in the gambling nature of day trading penny stocks and even day trading itself. Like people see me scalping. A lot of people said I'm gambling, and that's an understandable conclusion. The real edge is I take very quick short-term trades. I don't hold on to risk very long, and I just let my probabilities add up. I attack trends and momentum. But again, if you don't like the way of trading, it's all good. We don't just day trade. We swing trade. We invest here. We do a little bit of everything here. So it doesn't matter how you trade. We usually cover some content on it. Hey, thank you, team. No, I wish I made the beats, bro. No, it's just futures. It's just commodity futures, is what it is. Hey, thank you, Ola. Thank you, brother. Are you able to share your other screens briefly? I mean, not really. I could. I don't think it lets me share multiple at once, though. Yeah, market is neutral right now. It's kind of sideways, choppy. We're getting ready to trade, though. Like I said, this is our P&L today. It's pretty slight. We're up like $30 with commissions. We're probably pretty flat, to be honest. But that's okay. Hey, nice tidy. Bitcoin 100K in 23? Nah. Bitcoin would be lucky if it stays over 20K in 23. I hope it does. Listen, trust me. I hope we get 100K. But I'm skeptical, for sure. I think there's just risks in that, man, for sure. Also, guys, y'all check out Chart Prime. Chart Prime is really dope. It's one of the ways I trade. This certainly helps my trading too. And what Chart Prime is a trading view indicator service. So you can use it on stocks, crypto, Forex, and futures. And again, what it does is it shows you a lot of really useful stuff. So again, this is called Chart Prime. It's a trading view indicator service. It gives you reversal down signals. And look at how accurate these are. So number one, let's draw some here. Look, possible reversal down. Here, let me exit out of some stuff. I think I got too much stuff. My computer's lagging a little bit. Hold on. Bear with me. Let me exit out of some stuff. There we go. All right, that should be a little bit better. But yeah, what Chart Prime does is Chart Prime is a trading view indicator service. So look, possible reversal down, nice little drop. Bullish engulfing candle over a next like 10-minute period, we get a nice little bounce. A little bounce here after the candlesticks as well. And you can use it in crypto too. Like a lot of people use it in crypto. If we zoom out here, you can just see how like profound of an edge you can get here by looking at this. Like reversals up, you get a bounce. Reversal up, you get a pop over the next 10 minutes. Like look. Possible reversal up, nice little bounce there too. And we can keep scrolling here and keep finding them. They also show you like the top of the range. Look, reversal down and a bearish engulfing candle. Like, look at this. And we're approaching the top of the range. Like, look, here's the top of the range right here. So as we approach that, you get a reversal down and a bearish engulfing signal. Rejected here. Look at the rejection here too. Bearish engulfing candles, downward price action. And so I can't guarantee you're going to make money using this. Nobody can. But I think considering the price, it's very cheap. Like objectively speaking, it's very cheap relative to what you get. And it can be incredibly useful. Again, the real edge is when you find multiple showing up together at once. So like here's 3 signals showing up together at once right here. And then look at the big drop over the next like 20-minute period, you know, and you can keep using it for stocks, crypto, Forex, futures. Again, I can't guarantee you're going to make money. I'm definitely biased in their favor, but just really genuinely useful service there called Chart Prime. And if you want to check it out, here is the link in chat. I'll post the link. Market just ripped up, broke highs here, guys. Wow. Yeah, if you want to see the actual words from Jerome Powell of the speech, check the description. We posted the transcript. The poker tabs. No, I didn't play poker during the speech, man. I play poker early morning is what I play. Once we get busy with the stream, I don't have enough time to multitask in that way. I usually like 4 or 5 table poker. And so I don't have enough. I'm not able to multitask that well. I can't trade 5 tables of poker plus run a live stream plus trade plus deal with these speeches from Jerome Powell and manage that. I'm not able to do that. Early morning, maybe when nothing's going on. It's called Chart Prime. You can see the link in the description. IG. All right, but yeah, the market's pumping up here. Again, we're slightly green, kind of neutral right now. Yeah, Chart Prime. The link is right here, guys, for Chart Prime if you want to check it out. Google myself? I can't Google myself. I mean, Googling myself won't give me anything. Beginner trading is too generic of a name for me to show up in Google. Yeah, top 3 best multitaskers in the world right now, guys. All right, so we're testing highs here. We're going to buy this little mini dip and see if we can get a quick little bounce back up on the market here. For whatever reason, we're getting some weirdness on Quant Tower today on this platform. Again, we're slowly buying the dip here. 3 contracts. We'll take maybe 4 if we get a pullback. Even if we lose today, we've had like 3 or 4 green days in a row. So we've been doing really well over the past couple of days. I mean, yeah, I've Googled my channel name before. All right, 3 contracts. We're up a little bit. Let's see if we can get some more from it. Slightly green here. I want to give it a chance to make another test towards highs of the day. That's why I'm sitting in this. If we make another test towards highs, that'll be great. I could add another contract too. There's 25. All right, we just took. Bro, what is up with this, dude? I take profit and it doesn't fill me with like the profit that I have. That's frustrating. All right, so we just made $15. Oh no, we made some money. Okay, cool. Yeah, weird. All right, so we made like 25 bucks. Yeah, we are okay. We made more than that. We are up about $70 or $80. Here's the P&L on the day. It's choppy. Yeah, we trade micros mostly, like 5 of the micro, maybe give or take. I usually play 6 and 9 max sit and goes, like $10 to $20 sit and goes each. I usually play like 4 or 5 at a time though. Yeah, it's not my computer. I think it's something going on with Quant Tower, which is okay. Look at the SPY rip though, back up to 390s after the JP speech, man. Yeah, guys, thank you guys so much because that was the largest stream we ever did. We had like 7,300 people at one point in time. So again, thank you guys so much. But yeah, that was a weird speech. It was like Jerome Powell released, it's like he released the transcript to it early. And so it's like everybody's sitting there watching a speech that's basically already come out. And then they didn't really say much relevant about the economy. And then like it was just weird relative to what normally we get. You know. Right, so we're finally getting a pullback here. We're going to start to scale into a position here. By the dip, we are in 4 contracts. Going to get up to 6 here maybe on this pullback. See if we bounce on it. There's 5. Oof. Yeah, I like this size much better though. Like we were trying to trade the regular E-mini for a bit. And it just didn't turn out well. So I like the size of the 5 or 4 or 5 micros. I think it's reasonable. Like even when we're losing here, like $50 to $80 is a pretty cheap, reasonable size where we can swing when we want to swing. And if it turns against us, it's not the end of the world. The regular E-mini, man, that thing would just go against you so fast. It's so hard. All right, again, we are in 5 contracts here. I might add 1 more. See if we can get a little bit more in and then look for a bounce at 389s is what we're specifically looking for. We're trading into the profit that we've already built on the day, though. So 7 contracts is what we'll take. But yeah, we've already got a cushion on the day that we can swing into, that we can take a reasonable swing here and see if we can make some more. In the grand scheme of the funded account program, it's a small amount today anyway. So let's see if we get that pop up that we're looking for. Almost break even now. Let's see if we get it. Little bounce at 389. Same bounce we wanted to bounce there, which is what we got. Patiently waiting here. See if we can build up some support. We are on a green streak here, guys. So if we lose today, it's not the end of the world. Market's starting to look kind of weak, though. I don't like this. So we're going to cut that. So we lost a little bit there. Dude, what the heck? It didn't show up. Bro, I don't think today's the day to use Quant Tower. What the heck just went on here? Yeah, there's some type of lag going on Quant Tower. So I don't know if today's the right day for it, man. It's just weird. I don't know. Somehow I got out of that flat. But it doesn't make any sense. But I think we're getting some latency problems on Quant Tower. I'm going to have to reset it and see what happens. But yeah, if you want to check out Top Step, you can use any platform you want on Top Step. You can day trade, you can short on futures. Powell speech is over already. Yeah, for whatever reason, we're running into lag for sure. Yeah, I'm definitely not over trading, man. I mean, like I said, again, what I'll tell you, Cloud, is like, if you don't understand the stream, try not to critique the trading. Again, one of the rules here is like, if you never say anything else, don't show up just trying to critique, because that way it just seems like you're just sitting around waiting to criticize. The reality of it is, what I try to do here, and I think this will make sense if you hear it, is that I build up a cushion on the day in this account. And then once I have a cushion, like I just built up a cushion of like $80, right? And so once I have that cushion, that's what I'll scale up. And so now you see me on the last trade take like 5, 6, or 7 contracts because I have the cushion on the day to scale up. That way, if I lose on that individual trade, I'll be close to break even. And so when I swing big, I break even. But if I'm down on the day, I don't swing big at all. That way it makes it so that when I have green days, they're really big. And when the trading doesn't work out for me, it's somewhat break even, so I can kind of protect myself. So basically, I only swing really large when I have a cushion on the day, so to speak, if that makes sense, right? And I think that's the safest way to trade. Again, I'm in one of these funded account challenges, and so I have to be a little bit more aggressive than normal. $100 is great, but it's not going to get me funded, and so I have to scale up my size a little bit more and trade a very specific way of trading and system. If that makes sense. So I hope you guys understand. That's what I'm essentially doing here. Yeah, cannabis, I'm not against cannabis, Hey guys, we are almost up to 97,000 subscribers. We're at 96.4K. That's great. That's amazing. We'll get close to 100K. We're getting so close. Yeah, I don't know. Regarding the stuff going on today, it wasn't bad. The speech was okay. Hey, thank you, Sam. Yeah, we're getting there, brother. But yeah, just as a broad rule, though, and again, I'm not mad or upset or anything like that. Like, for whatever reason, like, my platform was acting weird. But yeah, just a general rule, like, if you never say anything else, don't show up and just start to critique, then you're just going to seem like a hater. You know what I mean? Constructive criticism is fine if you're like an active member of the community and like you're here every day and like, we have a good mix of like good beneficial content that adds to the community. But if you just got to show up and start critiquing, then like, it just seems like you're hating. What's TRW? Yeah, what's TRW? I don't know what that is. Powell speech is over already, brother. Powell speech was it finished about 20 minutes ago, 30 minutes ago. Yeah, bro. Like I said yesterday, I'm not even mentioning old boy's name. Science of taking money. His name is Voldemort to me. As a YouTuber, I'm not saying anything about that guy. I'm just kind of staying away from that. He is the name who shall not be said here. Okay, he might as well be Voldemort to me. You're never gonna get me to talk about him ever, bro. I'll pass on that. Yeah, for sure. And again, like I said, I don't even claim to be a good trader. That's not what we're really doing here. Like, I don't claim to be a good trader. I don't act like an expert. I don't sell a course. I don't tell anybody I know for sure anything. People ask me all the time, hey, John, what do you think about this stock? What do you think about that stock? What do you think about that stock? I always say, I don't know. I always say, I don't know what's going to happen. Nobody does. Got a little pop in markets, though, but we're mostly neutral today. Hey, thank you, Cloud. I appreciate it, man. But yeah. Yeah, my next tattoo, I'm gonna get a lightning bolt on my forehead. Hey, what's up, PK? Yeah, like look how accurate Chart Prime is too. And again, they are a sponsor of mine, so I'm definitely biased in their favor. But like, look at this. Like, I can't fake this. People hate on them, but it's like I don't understand why. Like, I think people are just mad for whatever reason that have sponsors. But like, look at this, dude. Okay, like, look, possible reversal down. Let me fix that. Like, I can't fake what I'm about to show you. Okay, possible. Let's make it so that you can actually see the moves that are happening here. All right, so like, look at this. I can't fake this if I wanted to. So like, number one, they added this new range bound indicator right here. And like, it's pretty accurate. Look, support hold, support hold, support hold. So that's the bottom of the range in the green line. But look at the reversal down signal. So they'll document support or resistance. They'll give you like bullish. They'll identify the bullish and bearish engulfing candles. So you don't have to. And really, they're just showing you what is already there. Like they're just saying, hey, that's a bullish engulfing candle. Hey, that's a bearish engulfing candle. Hey, that's a hammer candle. You know, so that's not like, that's not even a prediction. That's just saying, hey, look, those are those candlesticks. But like, look at this here. Possible. And this is recently on the SPY. Possible reversal down, big drop immediately after it gave you that signal. And these do not repaint. Like these reversal signals do not repaint. So they're literally called that. Look, the next one, possible reversal down before that. Huge drop over like a 20-minute period. Bullish engulfing candle. Nice little bounce afterwards here. And that's just in today's price action. Bottom of the range. It did hold support. It held. So again, it's called Chart Prime. You can check out the link for it in the description. It's pretty cheap. Like I said, I use it to find an edge in trading, and I can't guarantee you're going to make money. I'm definitely biased in their favor. But I mean, just on today's SPY price action, it looks solid. It's called Chart Prime. It's a trading view indicator service. Yeah, I mean, listen, I've been here for over 4 hours now. Of course, we're going to make money somehow. I mean, hey, what's up, Daniel? All right, so yeah, there's Tesla. Tesla looking weak today, dragging the market down. So you can see one of the reasons the market is down is because of Tesla. Tesla's looking weak. But yeah, really fun stream, man. We, like I said, guys, we're almost up to 97,000. We appreciate the support here, team, for sure. We're at 96.5K already. And the week's not even over, bro. We got CPI this week, which is going to be the biggest thing. CPI is Thursday, guys. So we have CPI Thursday. Hey, what's up, Miguel? It's the extremely thankful truck driver from Miami. Again, no complaints from my side, brother. You're a huge help with this whole mess nowadays, and your precise info and right on point. Hey, thank you. Thank you, Miguel. I appreciate that, brother. Thank you, man. Like I said, the positive comments keep me going, man. You know? Like, we get some haters here, but most of the time, I've said it before and I'll say it again, a lot of the haters are just people who, you know, they've got their own issues that they need to work out. So they're just kind of venting, you know, at me. And that's okay, you know, because it's like, I don't even know how you can really hate on us. Like, I don't claim to be an expert. I don't act like a guru. I don't sell a course. You know, I don't charge for any of my content. I don't even claim to be a good trader. You know, I always tell people I don't know. You know what I mean? So in terms of like the stock market, we're certainly in just a small percentage of people who are honest about results in trading. You know, there's a lot of sensationalism in stocks, and we just try to avoid that. Yeah, CPI is where this stuff is going on now. Regardless of whether you think the CPI data is accurate or not, CPI is really what's going to move markets. So again, if you're still here, we still got over 1,000 people here. Remember, guys, CPI, regardless of whether you like the data or not, regardless of whether you think the data is whatever, CPI will move markets more than anything else this week. CPI is a big influence over markets. Right now, Tesla's dumping down. So you can see Tesla falling. It's at 117.20s, looking weak. Oh, damn. Definitely the top 3 most humble traders in the world right now, for sure. You know, like, I'm so handsome. People say, man, John, you're so handsome. How do you do that? And I'm just like, look, I was just born this way. You know what I mean? Definitely most humble traders ever, too. You know, they say, John, you're such a great trader. How do you do it? I just say, look, it just happens as an accident, you know? Like, when you're this humble, good things happen. You know, when you look this good and you're this humble, you know, great things happen in the world. You know, that's all I'm saying. You know, top 3 for sure, most humble traders ever. No, Tesla's breaking lows. It's down under 118s here, under 118s. SPY breaking down as well. It's at 387.60s. Pretty neutral day, though. Pretty neutral day. We'll see what happens with the rest of the market, though. I'm going to go ahead and close it down. Love you all. Y'all stay safe. Y'all be good. I'll see you guys tomorrow. Remember, Thursday, we got CPI. big day in the markets, guys. Honestly, huge day. Biggest is the CPI streams generally are the largest streams we do every month. Every once a month we get the CPI streams, and those are the biggest streams we do. Very relevant data. If you don't know what CPI is the Consumer Price Index. It's an inflationary metric or gauge, and we want lower. Lesser is more. You know, inflationary problems have been going rampant over the last 6 months, and so a lot of people have been tuning in for CPI because CPI is just a gauge on how the market is essentially doing in terms of what the economy is doing, how the economy is doing, all that stuff. So again, we want less is more. I think expectations for CPI are 6.5%. And so if we go in under 6.5%, the market's going to push up more. If we do, it's arguable, but if we get under 6.5%, if we show like 6.1 or 6.2 or 6, then the market could tap 400 on the SPY. You know, the S&P could hit 4K. So we'll see. It doesn't mean it's going to happen. If we do, now, with that said, if we get worse than that, if we get like 6.7, 6.87 or something like that, then the market could dump down. We could hit 360s, 370s, depending on how much the market reacts to this, guys. So y'all be safe. If you're looking for the transcript, it's in the description, brother. Now, let me make sure. Hold on. Yeah, the transcript, go to the, refresh the page if you need to. Go to the description. It says, read the Jerome Powell speech transcript here. And then it also shows you the website where you can watch the speech live. Yeah, we try over here, you know. But yeah, love you all. Y'all be safe. I'll see you guys tomorrow.